TradeMasters changes everything.
The opening bout 60 minutes away following a 5-day slide, the longest daily losing streak going back to April of last year. Can we break that today? Equity futures up by 1/3% on the S&P, on the Nasdaq 100 higher by 0.4. With some movers going into the opening bout, let's cross back over to Manus Cranny. Hey, Manus.
Jonathan, it's official. No deal for steel. Nippon Steel's bid for U.S. steel has been blocked. And the reason, I quote, Nippon Steel might take action that threatens to impair the national security of the United States of America. So this is the Biden administration closing out its era, and it is about protectionism. They have a 30-day quit notice for Nippon Steel. The question is, what does this company become as an independent, if it remains independent, or does somebody step in and buy? JP Morgan say strong standalone valuation. Tough decisions will need to be made. 11,400 jobs and a number of blast furnaces that may be needed to be closed. Stellantis, let's have a look at that. Italian car production is down, but the niggling story here is about access to credits here in the United States of America, not just for Stellantis, but for VW as well. They've been closed out. The Biden administration making it tougher and harder to get access to the credits. That takes the stock down ever so slightly. And we got a reasonable response on Chewy when I spoke to you the last time from Wolf Research. The tagline here is the tail wagging 2025. It upgrades the stock to outperform. Price target $42, 24% upside. The sales lift upside isn't fully appreciated, according to Wolf. Had a quick chat with AI, and it says that on average, the pet owner here in the United States of America spends between $1,500 to $2,000 a year on their pet. Just make sure it's good quality pet food. Jonathan.
Any evidence, Manus, that they're sacrificing their dental hygiene for their pet, which is what you insinuated earlier on this morning?
You know what? Everybody should look after their personal hygiene, their teeth, health, dog, everybody.
Hunts.
Walk it back.
Yeah, exactly.
Walk it back. Okay, thanks, Manus. Stock is up by 2.6%. More broadly, equity futures attempting to bounce back here. We saw this move yesterday. Equities up, and it just did not stick, did not hold through the rest of the session.
And really the theme, frankly, of the morning to me and of the week so far, the 2-day week, if people came back after the new year, was this question of, is this the point at which yields start to impede risk assets? And that seemed to be what we saw yesterday, with yields coming up after originally seeing some sort of rally, and that really leading some of the sell-off that we saw more broadly.
Prima Misra of JP Morgan Asset Management making that argument a little bit earlier this morning. For traders, we're looking for the fresh catalyst. It's just around the corner. Data picking up next week, ending with December payrolls before we get CPI on January 15th, the presidential inauguration on the 20th, and a Fed decision at the end of the month. Stephanie Roth of Wolf Research, Mark Banner of Bank of America joining us around the table. To the two of you, good morning and Happy New Year.
Good morning.
Good to see you both.
Happy
Let's
New
start
Year.
with you, Stephanie. Expectations for a week today in a payrolls report?
Yeah, so we're looking for 175 on payrolls, which sounds a little higher relative to expectations. But I think the surprise from the report, just given where markets are, is that it could come into the soft side. Forgetting about the headline number, there could be downward revision to the prior 2 months. And importantly, we're looking for an unemployment rate that could tick up a little bit higher than what expectations are looking for. So there might just be some soft pieces of the report that at the margin could put some downward pressure on yields.
Where's the weakness come from? Because I think the bulls right now would say claims are low, layoffs are low, things look pretty good. What looks bad?
The breadth hasn't been very good in terms of hiring. That's been quite disappointing. A lot of the gains have been driven by healthcare and government, and that's not a sign of a really, really strong labor market. So we think the labor market is fine. We think the underlying trend is 140,000. But at the margin, that's probably a little bit softer than where consensus is at the moment.
Mark, we were talking earlier with Claudia Sahm, and she was talking about how the Fed has really injected a lot of volatility into the market, and the rates market in particular, as a result of its data point dependence. Do you expect there to be quite a bit of volatility either way if there is any kind of surprise whatsoever on Friday's payrolls?
We do. We also think that volatility is going to be a little bit higher in the rates market this year, simply because the Fed is so data dependent, and there's still so much we don't know about next year. How will all these economic policies take shape? What will the impacts be? And so we do think that a very data-dependent Fed in that context will just keep rate vol a little bit higher than it otherwise would have. Now, if we get the kind of number that Stephanie was talking about, if we see some softness in the underlying data, we do think that there's pretty good potential for rates to move quite a bit lower. largely because we think that there's so much good news that's priced into the market right now. There's so much optimism about U.S. growth remaining strong, about around elevated risk asset valuations, that if you start to see any wobbles in the economy, then we do think that there's a fair amount of a reassessment that's going to have to happen, and that should mean lower rates.
Do you think that that's the bigger potential surprise, is actually some weakness that spurs a rally just based on the positioning so far?
A rate rally, yes. Look, we generally perceive that right now optimism in the market is extremely elevated, and we've seen that over the last few months. There's a great deal of expectation that this is going to be a super growth-friendly administration, and that's that their scorecard's going to be the S&P, and that's essentially, we think, driven risk assets to very, very elevated values. Whereas we think that the range of outcomes next year is much wider. We don't know exactly what the policies will be. We don't know what the impact on the economy will be. And as a result of that, we think that there's a little bit of a mismatch there. Elevated optimism versus a very wide range of outcomes. And we do think that that should be supported for duration, at least in the early part of next year.
Stephanie, on policy, what assumptions have you made about policy changes from the incoming administration through the next year or so?
So for this year, we think it'll be mostly about deregulation, which is a positive for growth. The tariff thing is, of course, one of the biggest questions. We don't think that will happen until later this year, partially because they want to tie that to TCJA. And importantly, like Mark said, there's a ton of uncertainty when we're thinking about policy, but we think a lot of it's going to be relevant for 2026 rather than 2025. But it's not likely to be that stimulative, right? The TCJA is a $4 trillion tax bill that's going to be just keeping policy as is. It's just to keep policy largely steady. There's going to be a couple of things that could at the margin be growth positive, but then we have tariffs, which are a massive headwind.
Well, just on tariffs, are you saying that the primary objective of tariffs will be for revenue-raising purposes from the incoming administration? Is that what you're suggesting when you're saying the two will be tied at the end of next year?
I don't know if it's necessarily the primary objective. I think the primary objective is, Trump genuinely believes in tariffs, but then they do raise a lot of revenues, and that's something that they're going to need a whole lot of when they're thinking about this tax package.
Well, you mentioned this, and I think it's important. Policy changes is one thing. Anticipating the economic consequences of them is quite another. It's not obvious to me how inflationary or not tariffs would be. Depends on how they're put together, how they're executed, whether you get retaliation. Also completely depends on what happens elsewhere, in foreign exchange, investment decisions made by companies elsewhere that want to be in the United States and want exposure to the US economic story. What kind of assumptions can you make on changes and consequences?
I think it's really challenging for Stephanie and other economists. Look, our economists, I think, have done a very good job trying to dimension to the best of their ability what the key considerations are. But they'll be the first to tell you that the range of outcomes is extremely wide, and that their confidence around these assumptions that they're making is extremely low. And you're right, Jonathan, there's so many other things that can impact the potential inflationary consequences of tariffs. Look at CNY overnight, right? 7.3. So you're starting to see the FX markets price some of this in, and to have a lot of confidence around what the overall economic outcome will be is, we think, it's very, very difficult at this point in time. Now, to be overly concerned around inflation, yes, some of these policies could indeed be inflationary. They were not terribly inflationary last time. And what we think the market should be spending a little bit more time is trying to think about, okay, well, what is the Fed's reaction function? Last time their bias was to look through any potential inflationary impact, or at least that's what the transcripts tell us. This time, of course, the macro backdrop is different. Core PCE is more elevated. We just went through a very inflationary period. So will their reaction function be the same? We don't know yet, but to me, that's what I'm going to be looking for to think about what the impact is to the bond market. And right now, my bias is still to believe, and our team's bias is still to believe, that the Fed's likely impact will be to look through to the extent that they can, especially if they start to see that tariffs have any type of negative growth impact. Finally, look, just to go back to some of the points that Stephanie made, I think they're really good. Just think about where the market narrative is right now and what Stephanie said. The policies are probably not going to be all that stimulative. Impact mostly in 2026, not 2025. Where is the market right now? Look, you two talk to a lot of people. You'll know probably better than me. I talk to a lot of clients as well. I generally think that clients' mind frame is that these policies are going to be impactful near term, and that they will be quite stimulative. And again, that's where we think market optimism is. Range of outcomes is a lot wider. And again, for me as a rate strategist, I think that probably means lower rates as you see some convergence in this.
We were just speaking to Ed Yardeni, and he actually came out with this fantastic analogy, which is essentially that this is a doctor who prescribed all this different medication without running it through the computer to see which interacts with which. It raises this question of how important is that mix of policies based on where the economy is right now. Stephanie, from your vantage point, Mark's talking about how he thinks too much optimism is baked in from policy perspective. Is there too much optimism baked in with respect to the economic data that we've already gotten in terms of where we are coming from and how much inflation is still in the economy and how much momentum there is?
Yeah, I think that's totally fair. Like part of this, these things go hand in hand. So what's baked into the rates market is the expectation that the economy is running on all cylinders, quite strong. And like, yeah, it is, but it's probably not quite as strong as the outlook suggests. And the FOMC kind of introduced a little bit of extra optimism about the economy. That's probably gonna disappoint to some extent. We'll probably see payrolls running a little bit slower, allow them to actually cut certainly 2 times this year, and the market's pricing in a little bit less than that. So the economy's running just fine, but the expectation is, similar to what Mark just said, that Trump's policies are gonna be incredibly, growth positive, and they're gonna be happening right now, and they're probably not. It's going to take a while for a lot of the stuff to play out.
Do you agree with Mark that the Fed's bias is going to be to look through any of the temporary effects of some of the tariffs?
I think that's what they should be doing, in the sense that if they don't and they start becoming notably more hawkish as a result, that could be a recipe for a recession, in the sense that we are largely at full employment. This could become a real problem. If we start to see the Fed reaction function look quite different than what it was last time, we might have a real problem, in which case growth is likely to slow down notably as a result of these tariffs. Tariffs are stagflationary.
Mark, I'm just curious, when you take a look at the Fed's reaction function, we were talking with Claudia Sahm, and she was saying that they have introduced this volatility. We were just speaking about that. She was saying that they should follow models a bit more, and in particular, some of what she's seeing in the employment market. What would you be following if you were on the Fed as your sort of lodestar for where the economy was heading?
Yeah, look, in periods of very elevated uncertainty, which I think we are in and are going to continue to be in the early part of next year, we think the most basic monetary policy rules can be very instructive, like the Taylor rule. Now, any model is only as good as the assumptions that you want to make and the inputs that you have into that. But we do think that Taylor has been a pretty good guide over recent years. The Fed does not, nor should they, follow it blindly, but they should use that as a meaningful input. Other Fed officials, Chris Waller, has talked about how they do indeed do that. And right now, at least, they've pretty much converged to near where Taylor suggests that they will be. And the big question is, what does the data imply from here? The market thinks that the Fed will only need to cut about 40 basis points more and then they'll be done. But if you actually use the Fed's own economic projections in their SEP, the medians and the unemployment rate, as well as on inflation, core PCE, it suggests that they should really be cutting probably something more close to 100 basis points. And so it really depends upon, again, what are the core economic assumptions that you have. The market's very optimistic right now. I think that growth is going to remain strong. The unemployment rate won't rise much above 4.2, maybe 4.3. Inflation is going to stay sticky. But if you do see inflation move down, or if you do see the unemployment rate tick up a little bit more, then the market's going to be talking about a Fed that could potentially be cutting a lot more than what is currently priced. Look, just final point for me. When I think about the Fed's reaction function more broadly, and I think we in the rates team agree with this, we generally believe that the Fed's going to overweight labor data. And John, you're right. The labor market right now is really strong. Breadth is kind of narrow. We think that the labor market can best be summarized as one where there's not a lot of firing, but there's also an increasingly slower pace of hiring. And the claims data very much points to that. It's still a very healthy labor market overall. Yeah. But continuing claims, really, if you look at a 4-week moving average, they continue to edge up over time while initial claims stay stable. And if that trend continues, I do think that the Fed's going to be seeing a labor market that maybe has less breadth and a little bit more concern than at least what the most recent Fed meeting would lead us to.
I'd be the first one to acknowledge that it won't take much of a downside surprise next week for a lot of people to start pricing in more rate cuts from the Federal Reserve.
Well, that's an interesting kind of dynamic that's changed in terms of where the bias is for this rates market and whether it's set up more for a rally than, say, a sell-off.
Mark, Stephanie, to the two of you, thank you. Good to see you both. Mark Banner of Bank of America, Stephanie Roth of Wolfe Research. The calendar for the next month, I think you're all familiar with it by now, but some dates for you if you want them. The 10th for payrolls, the 15th for CPI, the 20th, of course, for inauguration, then the 29th for the Federal Reserve. Just want to draw your attention to one single name moving in the pre-market, Rivian, coming out with fourth quarter deliveries coming in better than expected, following the downside surprise that we saw from Tesla yesterday, and a move lower in the stock. Rivian coming in at 14,183, the estimate least at 13,402.
And before we draw too many parallels, Rivian had been constrained with production just based on component shortages. They said that no longer is an issue of component shortages something that's plaguing them. So maybe releasing some of the production. I remember when there was more on order and they couldn't produce them quickly enough. And now there's a question of whether that's normalizing.
That's a good problem to have. Yes. The stock is up by about 5% in early trading. Let's get you an update on stories elsewhere with your Bloomberg brief. Here's Danny Berger. Hey, Danny.
Hey, John. Bloomberg reporting that President Biden is preparing to permanently ban new offshore oil and gas developments in some U.S. coastal waters. It's an effort to lock in protections during his final weeks in the White House that are difficult to revoke. People familiar say Biden is expected to issue the executive order in the coming days. The declaration would not affect drilling and other activity on existing leases. BlackRock's Bitcoin ETF posted a record outflow on Thursday. Investors pulled a net $333 million from the iShares Bitcoin Trust ETF. That's the biggest withdrawal since its launch. Data from Bloomberg also show that investors pulled funds for 3 consecutive days, the longest losing streak so far to date. And in sports, the Fighting Irish are the winners of the Sugar Bowl after upsetting Georgia 23-10. Notre Dame scored 17 points in under a minute and rode a strong defensive performance for the win. The game was played in the wake of the deadly terror attack in New Orleans after being postponed one day. The Irish will now play Penn State in the Orange Bowl. Texas, meanwhile, will take on Ohio State in the other semifinal matchup next week. And that's your brief, John.
Danny, thank you. Thanks for this morning. Up next on the program, we'll set you up for the week ahead and get you the latest news in the nation's capital. That's up in just a moment. From New York, this is Bloomberg.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I love the fact that you have, we say the cojones, but I can't say that in Bloomberg.
Maybe moxie.
Yeah, moxie. I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Billie Jean King.
Well, what should I learn? What should I do? I said, learn the business.
Jay Williams.
You're an asset, but how do you become the principal?
Paul Rabel.
We're going to be the league of digital, and that's why you're going to invest.
Adina Friedman.
I definitely am competitive.
David Rubenstein.
People don't come up to me on the street and say, let's talk about this private equity deal you did recently. No, nobody does that. They say, let's talk about the team.
And so many more.
Do you need a clap?
Not anywhere.
Go.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
As we spend some time here on the broader presidential race,
let's focus in on European politics.
Makes you wonder how politics might play out.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
The opening bell about 41 minutes away, with equities higher by 0.3%. Bond market rallying just a touch, yields are lower by 2 basis points, 454.10. In the FX markets, just some stunning moves to kick off 2025. The dollar absolutely ripping yesterday, the euro getting crushed. Just to see the euro dollar break down through 103 to 102 for the first time since 22. Stunning for the Europeans, and it just speaks to the divergence that so many people have started to expect over the last number of months.
Yeah, and the divergence just seems to be edified by economic data. Yesterday, we got those jobless claims that came out at the lowest level in 8 months. It just raises the question of what is priced in versus what can we expect in a year full of unknowns.
A big week ahead for you, including the first full week of 2025. Before we get to the weekend today, the House holding its speaker vote, plus ISM manufacturing at 10 a.m. Eastern. On Monday, durable goods data. On Tuesday, JOLTS data plus ISM services. On Wednesday, ADP payrolls and Federal Reserve minutes. On Thursday, another round of jobless claims. Then on Friday, it's the first big print of 2025. It's the December payrolls report. Before we get there, let's head down to the nation's capital to catch up with Bloomberg's Tyler Kendall as the House Speaker Mike Johnson faces a crucial vote. Tyler, good to see you. How close is this one going to be?
Yeah, good morning, John. It is by no means a done deal for House Speaker Mike Johnson. We know he's been strategizing with President-elect Donald Trump, who's thrown his weight behind Johnson's bid, even going as far as offering to call holdout Republicans if that's what it would take to get their vote over the finish line. I know one of the first things I'm going to be asking undecided Republicans as they start to trickle in here to Capitol Hill is whether or not they received a call from Mar-a-Lago overnight. Now, I can tell you that I spoke to one congressional aide this morning who told me that this really could come down to a potential deal on spending cuts. And that's because if you look at the Republicans who have been voicing opposition to Speaker Mike Johnson's re-election bid, they're the same Republicans who have been voicing concerns about what a future potential Trump agenda could mean for the fiscal outlook of the country, particularly when it comes to anticipated tax cuts. But John, it's important that when we are talking about a potential Trump agenda, if Republicans can't solve this today, that could bode badly for the party, considering if we look ahead to just Monday, January 6th, Congress is expected to count and certify the 2024 Electoral College votes. Yeah. And party leadership has made it absolutely clear they want to see that go off without a hitch.
Tyler, before we get into some of the other developments this morning, including the Nippon Steel deal, we did get a message from Donald Trump on Truth Social saying that Speaker Johnson is, quote, very close to having 100% support. Do we have any backing to understand whether that actually is the case?
So the key thing to remember here is that Speaker Johnson would need a majority of the votes in order to clinch the speakership. If everybody shows up to vote, which isn't necessarily a given, but let's say they do, then that magic number he needs is 218. He's coming in to this Congress with 219 Republicans, which means he can only afford to lose one vote, and we already know that he has. Congressman Tom Massey, a Republican from Kentucky, has said unequivocally that he will not be voting for Johnson, and there hasn't been any latest reporting saying that he's changed his mind there. When you're hearing Trump say that he could have unanimous support, we also have to keep in mind that Democrats are by no means going to come to Republicans' rescue on this one. We are expecting all 215 Democrats to vote in favor of Democratic leader Hakeem Jeffries.
Tyler, Lisa mentioned it earlier this hour, the President of the United States, Joe Biden, coming out and officially finally blocking Nippon Steel's proposed takeover of U.S. Steel. Is there anyone in opposition to that decision down in Washington, D.C.?
Right. This wasn't necessarily a surprise here in Washington. Biden issuing this statement earlier this morning ahead of a January 7th deadline for him to decide. And in that statement, really harping on this idea that he's trying to protect American steelworkers. We saw this as a flashpoint in the 2024 campaign. President-elect Trump also during the time saying that he would block the deal. And I will tell you that back in May, I had actually caught up with Senator J.D. Vance before he was Vice President-elect, who had an interesting view on this deal, particularly because, of course, he's from Ohio, and we know Cleveland Cliffs was also bidding to be part of that merger. And he had told me at the time that he understands that Japan, of course, is a close ally, but ultimately we have to recognize the national security concerns around this, particularly considering how close they are in the region when it comes to China. So we're going to be checking in with the Trump transition team today to see if there's any updates there on that thinking, but that's what we were told at the time.
Tyler, appreciate your time. Great reporting as always. Looking forward to your coverage. True today, Bloomberg's Tyler Kendall there. With US Steel in the pre-market down by something like 8%, and the path forward for that company very much unclear.
It seems like they need to do something, whether it's divesting parts or possibly selling themselves to another bidder. And a lot of people were saying that Nippon Steel was the best potential option for them. The national security concerns are interesting. The fear is that there could be some sort of flooding of the market of cheap steel to reduce the value or potentially the market share of U.S. Steel. That had happened in the past. A question going forward about what this means for international companies investing in the U.S. and which areas are important to sort of preserve for national security versus are up for grabs.
I do wonder if we get a change of mind from the incoming administration.
You think?
Watch this space. Who knows? Got to change your mind on TikTok, didn't we?
Oh, well, yeah. I wonder if this actually adds
Big
up the pressure on that. Yeah, I mean, he's already said that he wouldn't necessarily, that he would block the deal. So we'll see. I can't imagine. Politically, do you think that that would be feasible?
Who knows? He's not running for election again, is he?
That would be
so
interesting.
who knows? Honestly, watch this space. I think we've got to be open-minded about absolutely everything. How do you feel about a two-day week?
I think that's a fantastic idea.
I think it could catch on.
I think very much
I think it could catch on. It works for me. I don't know if it works for you. Coming up on Monday, looking ahead to next week, fantastic lineup for you. As we look ahead to Payrolls Friday, we'll catch up with Laurie Calvasina of RBC. We'll speak to Jane Foley of Rabobank. What a year already. Only 2 days in for foreign exchange for both the euro and the Chinese currency. Levels we haven't seen on the euro since 2022, for the Chinese currency since 2023. We'll speak to Liz Young-Thomas of SoFi as we start to see this bond market constrain returns in the equity market. Priya Mishra of JP Morgan Asset Management earlier on with us this morning. Fantastic on that. And Michael Gapin in a new seat at Morgan Stanley, looking ahead to Payrolls Friday. The estimate's something like 150 in our survey, down from the 200-plus gain we saw in the month before. From New York City, that does it for us. Have a fantastic weekend and a Happy New Year to you all. We can stop saying that in about a week from now. This was Bloomberg Surveillance from New York. This is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
You are also an owner, I should have pointed out, of 3 major sports teams.
That's right.
And you're the first woman, as I understand it, the first woman to own 3 major, have a stake in 3 major sports teams. Is that right?
Yes, and we'll say African American.
You were approached by the owner then of the, I guess, the Washington Wizards and the Washington Caps about maybe buying the Washington Mystics, which is the women's basketball team. And what did you say?
Well, first of all, it was Abe Pollin. He did come to me and Susan O'Malley, and they said, Abe Pollin says, look, I want you to be the face of the Washington Mystics. And I said, what do you mean be the face of? He says, I want you to buy this team. His health was failing. And I have to tell you, and a lot of women can understand this, we never get these opportunities. So that was the first thing that struck me, and I was flattered. I was really flattered. I said, well, Abe, what are the financials on this? And he handed them to me. He says, well, they're not making money. But I was still intrigued about team ownership.
In
missed it on Bloomberg, the China show.
What's been the sentiment? What's been the reaction to this U.S. election outcome on the ground?
They were pretty much ready for Donald Trump. There was a high expectation that he could return to the White House.
We have dealt with him before, and after quite a few years, China simply is better prepared, and China, psychologically speaking, is much more prepared in dealing with him again.
Probably are fully prepared for Trump to impose higher tariffs on China.
What's the tone as they were talking to really a global investment?
Right. The openness of China, including the capital markets, Hong Kong being an international financial center, will be extremely important in channeling global investors.
Don't miss the China show live every weekday.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Futures higher once again, although the past couple days it turned sour. 5 days of losses. We are 30 minutes from the start of the cash trade today. I'm Matt Miller.
I'm Sonali Basak.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Coming up, no deal. President Biden blocks Nippon Steel's bid for U.S. Steel, ending a year-long saga over the future of an American industrial giant.
And car sales get an electric boost from Trump's threat to eliminate tax credits for EVs, but the surge isn't expected to spill into this year.
And smart money from Millennium to Citadel. Multi-strategy funds delivered double-digit gains in 2024. A strong year for the hedge fund industry. All of that and more coming up. But let's take a look at where markets are trading. Like Matt said, we had a down day yesterday. Technically the worst day of the year. You can see we're seeing a little bit of a bounce this morning, though, up about 0.2%, 0.3% when it comes to the S&P 500. Same story if you take a look at big tech, of course. A lot of people still on vacation, so I don't know how to read too much into this, but you take a look at the bond market as well. You're seeing a little bit of a bid materialize, but similar levels to where we were yesterday, Matt Miller, currently just above 4.5%.
I can tell you're actually thinking about Mike Johnson, and that vote starts in just about an hour's time, so we'll keep you up to date on the speaker race. Taking a look at what's going on with Bitcoin ETF, this is really an incredible chart. $54 billion of inflows over the past year. But in the last week, we saw the biggest week of outflows on record, more than $300 million in outflows. So BlackRock's Bitcoin ETF looks to get a little weakness at the start of 2025.
Wonder what that says about risk appetite. We're going to talk about that more. But before that, some stocks we're watching. We were talking about U.S. Steel. President Biden blocked a $14 billion sale of U.S. Steel to Japan's Nippon Steel, saying that the company should be American-owned and operated. And we're going to talk more about that in a moment. But for now, it's down almost 8% pre-market. Looking at Rivian on the rise, up 4.6% pre-market as well, climbing after reporting fourth quarter deliveries that topped estimates. The company says supply chain shortages are no longer an issue. And finally, Stellantis had lost access to a $7,500 U.S. tax credit amount under tougher rules that took effect this week. It applies to certain plug-in EVs. Stellantis now down 2.3%. That stock has seen a lot of pain in recent months, Matt.
Yeah, a lot of pain. I'm looking at Rivian. Since it started trading, down 83%. Maybe today is a good omen. Maybe 2025 is going to be that car maker's year. But there's a lot going on today. A lot of bad news, right? U.S. Steel down. Alcohol producers going to have a cancer warning label.
Yeah.
But Rivian's good news.
Rivian is good news, a drop in the bucket, of course, relative to their experience since they IPO'd. But it's interesting. If you zoom out and you look at this market, Isabel Lee had a great note in our morning newsletter about the Santa sell-off. Basically, seasonality has gone by the wayside. And I think a lot of it comes back to the Fed. You think about that December 18th Fed meeting, that hawkish cut, really that's when the narrative changed, and bond yields have gone straight up since then.
And if you're afraid of short-term rates, then how afraid of you are long-term rates? That idea that you've been pointing out, that short-term rates have fallen, yet the long-term has risen. That 4.5% danger zone that we've talked about, we're sustainably above that now, and that has coincided with that weakness in the stock market, really off almost 4% now from its highs.
Yeah, but the uninversion is something I want to focus on in our next interview. Dive into these markets with Crossmark Chief Market Strategist Victoria Fernandez. And Victoria, before we get to the financials, I know you like that trade. I want to ask about the broader market. It's been a really disappointing December, down 2.5%. The Santa Claus rally really didn't materialize. Is that malaise set to continue into January, into Q1 for stocks?
Yeah, today's our last day, perhaps, to see a change in the Santa Claus rally, and I just don't think it's going to happen because what you're saying, I think, is exactly right. We're going to have this volatility and this falling sentiment. You know, sentiment had reached extremes a few weeks ago. Now it's starting to come back down, and there's a lot of volatility going on, and I think there's good reasons for it, Matt. I mean, obviously the Fed, you guys were talking about the Fed. Come January 20th, we probably have some executive orders coming our way that people aren't exactly sure how that's going to affect the market, whether it's around border security, whether it's around tariffs. We'll probably have something pretty quickly coming in there. We still have geopolitics issues, yields, which you guys are talking about, and you know that longer end of the yield curve going out, not because of inflation concerns, but because of term premiums, and that's something that can continue to cause volatility. We've got a potential strike January 16th. There's a lot that can cause volatility, and that's what we think we're going to see for the first quarter of this year. So I wouldn't be surprised for sentiment, even though typically it's pretty strong in January, to not be such a tailwind.
It seems to be a very catalyst-driven market. A year ago, we would be talking about those dates upcoming in terms of economic data points, Fed meetings, and now you're putting in strikes and executive orders into the equation as well. With that kind of volatility potentially expected, what's the floor on the S&P 500 as you calculate the downside risk?
Well, I don't know exactly what the floor is, but what I can tell you is that we keep going back to kind of where those October highs were, right around that 58 to 5,900 level. We're kind of right in the middle of that right now. I wouldn't be surprised if we stay in a trading range somewhere around there. Now, I also wouldn't be surprised if we have a larger pullback. This may be the time that we've been talking about probably for the last 6 months, where we were expecting a larger pullback in the market. All of these catalysts that we're talking about, perhaps this is the moment where they all come together in the first quarter of this year and we get a larger pullback. Maybe we get a 7 to 10% pullback. I don't think we probably go into a full-on recession, but if we do, based on what I think will probably happen throughout the rest of the year, it's probably a good buying opportunity.
Interesting. So a 7 to 10% pullback, and that, of course, is the maybe an entry point there. If we do see that sort of pullback materialize, what's leading it? Is this tech-led? Is this sort of the biggest names leading us downwards, or do you see this broadening trade that we've been talking about deteriorating further?
Yeah, that broadening trade, I think, is really key. People were anticipating that, and we actually saw the market broadening out towards the end of last year, and then it flipped on us pretty quickly. I think it's going to be a combination of elements that bring us down. I don't think there's going to be one trigger. I think it's the concern around the debt. I mean, you guys were talking about the speaker vote today. This is just the start, I think, of a lot of headlines coming out of Washington over the next couple of months. So it can be a combination of Washington, debt moving higher, bond vigilantes saying enough is enough and pushing yields higher. Let's see what happens with earnings. Earnings have been really strong, and you know, market is anticipating double-digit earnings growth again this year. That seems like a really high bar. I wouldn't be surprised if we have maybe less than promising earnings come out, and that could be one of the triggers as well.
You know, you list some drivers to the upside, earnings being one of them, right? If we make those targets. Sentiment is good. It still seems pretty bullish to me. And then liquidity is another one you mentioned. So I looked at the M2 money supply, and I saw that over the last year, the slope has been steeper than it was in the pre-pandemic decade. That's, I guess, good for stocks, but also could be bad, right? If it means inflation could come back. What do you think about that concern and the accompanying Fed moves?
Yeah, so liquidity is a big driver of momentum in the market, and you're right, M2 money supply has gone up pretty much, and so that's a positive for this market. And we'll probably have additional liquidity, Matt, coming in the first quarter of this year. If we hit this debt ceiling, well, we have hit the debt ceiling, but if they don't increase it, the longer that goes on, the more that the Treasury has to bring in money from their general account. That's adding more liquidity to this market. If you have the Fed cut rates, that's easier money, and it adds to loan growth and other elements as well. So yes, that's positive from a liquidity standpoint, which is good for the market, but you're also increasing demand as that money comes into the market. So you're right, there could be an inflationary tone to it. It's a very tight balance right now for the Fed, I think, between what inflation is going to do and the labor market. They were so focused on the labor market thinking inflation was handled, and now I think over the last month they've realized maybe that's not the case. It makes their job pretty difficult.
You know, I also want to cite here back to what Matt wanted to ask you about the yield curve and the financial system, because you do see the 210 curve sitting at a 30 basis point differential. It is a steepener's dream. And you also see longer term rates staying high, which could bode well for net interest income, notwithstanding that there are some concerns about consumer delinquencies and charge-offs rising, where we stand in the economy right now. How do you think about the balance of risks as we head into earnings season for the big banks in just a couple weeks here?
Yeah, obviously that steeper yield curve, like you said, will be positive for that net interest margin. And the balance sheets are so strong for these large banks right now. I mean, you compare it to where they were a couple of years ago when there were concerns with the consumers, and that was a completely different story. There was a lot of concern and volatility with those bank names, but their balance sheets are much stronger now. They can handle things like that. They have larger reserves put aside. So I'm not worried about the banks, even if we see some of the delinquencies move higher. But it's that high-income consumer that's really been driving a lot of the consumer movement here in the economy, and I think that will continue to happen. But look, credit card interest, $170 billion paid in credit card interest the first 9 months of 2024. That's a lot of interest there. I think we need to see some of that come down, but we have seen household financial assets up 13% year over year, so there's some cushion there. But I think banks are going to be a good buy going forward, especially with the pullback that we've seen over the last couple weeks.
Victoria, we don't have a ton of time left, but before we let you go, I do want to get your thoughts on a puzzle that I've always been wondering about when it comes to financials and the yield curve, because Sonali, I know you said it's a steepening dream, but the 2-10 curve is only at about 30 basis points, which isn't negative 100, but is it the direction of travel or the absolute level that matters?
No, you know, look, when we get earnings reports, it's always the guidance, right? It's not the actual numbers that are important. So I think the banks are looking at what is the trend. Is it going to continue to get steeper? And it looks like if term premiums continue to move higher, they will get that. And if the Fed continues to cut rates, that lower end will come down. So I think banks are saying they could get a little bit steeper from here. But even if they don't, they're in a much better position than they were over the last 18 to 24 months. That will be positive for their margins and for earnings.
All right, Victoria, thanks so much for joining us. Crossmark Chief Market Strategist Victoria Fernandez talking us through markets at the top of the program. We are going to continue to focus on these markets and some of the specific stock stories. U.S. Steel and Nippon Steel may take legal action after President Biden formally blocks that deal. You can see the shares down 8%. This is Bloomberg.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets. Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
I think one of the dirty little secrets of credit is that the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're going to get your money back. And this world where there's these disruptive companies that have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution. We think that there's a lot of opportunity with those businesses.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Let's get now to high interest, look at what's making headlines around the world. Congress convenes this morning, and House Speaker Mike Johnson is up for re-election. Johnson is confident, telling Fox News that he had the most important endorsement he needed, President-elect Donald Trump's stamp of approval. In a post on Truth Social earlier today, Trump said Johnson is, quote, very close to having 100% support. But it's not quite that. The U.S. Surgeon General Vivek Murthy is calling for cancer warnings on labels of alcoholic products like beer and wine. Vivek Murthy said less than half of Americans are aware of the risks, pointing to heightened risk of developing breast cancer and tumors in other parts of the body. Shares of European drinks makers are falling on the news. And the Fighting Irish won this year's Sugar Bowl after upsetting Georgia 23-10. The game was played in the wake of the deadly terror attack in New Orleans after being postponed one day. Notre Dame will now play Penn State in the Orange Bowl. Meanwhile, Texas will take on my Ohio State Buckeyes in the other semifinal matchup next week. I'm very much looking forward to another national championship. Shonali?
Now, we're going to talk about a deal we've been watching closely for the last several months, really, Matt. And we're talking about President Biden blocking the $14 billion sale of U.S. Steel to Japan's Nippon Steel. I will also say you called it very early on, Matthew. The companies have signaled that they will pursue legal action, so the story is far from over. Bloomberg's Joe Doe has been covering the saga throughout. I want to read you a quote here because this particular view is far beyond the consensus, and that is that of Terry Haynes at Pangea Policy, who thinks that Trump will likely change Biden's decision, and there's very likely to be no Nippon Steel specific or Japan specific national security grounds for Biden's decision, one of which are required by law, which makes the decision, this is according to Haynes, illegitimate at best and illegal at worst. How do you think the Trump administration would view this deal, and is this view, do you think, predicated on the idea that ultimately U.S. Steel might need this deal?
I mean, listen, the President of the United States has codified in statute the ability to kill a deal. I know that President Donald Trump has said, and he said last month very specifically, that he would kill this deal. As to whether or not he might not kill this deal, I don't even know where to begin. I don't think we're there yet. I think that this deal, as of now, looks like it's dead. I mean, if you look at the way the stock is trading this morning at about $30 a share, that's implying that a lot of the arbitrators are saying that this is dead. I don't know. Trump is still 20 days away from being president, but right now, I mean, this thing is finally dead. Joe Biden finally followed through with what he's been saying, which was going to keep the company an American company. And listen, again, Donald Trump has said throughout the campaign and again stated after the election that he would kill this deal. He did not want U.S. Steel to be a Japanese company.
Yeah, at least going by the words spoken from the horse's mouth, it seems like President-elect Donald Trump is spiritually similar towards the deal as President Biden. But let's talk about what could actually happen now with the deal finally being dead. Does U.S. Steel survive as a standalone? Does it restart the sale process? What is in the realm of the possible?
Yeah, I think they're going to have to kind of think things through. Do they survive as a standalone company? Yes, of course they do. They bought Big River Steel, which was an EAF back in 2019 down in Arkansas. They doubled the capacity of that mill. It was widely viewed by the market at the time as a expensive purchase, but in the long run is a purchase that saved U.S. Steel. There were always questions about the integrated mills, in particular how much they would have to spend to rehabilitate those mills. What do they do next? I think the board is going to have to make a lot of decisions. They're going to have to ask themselves, what is the future of the CEO, Dave Burt? They're going to have to ask themselves, if we sell, are we going to break things into parts, you know, the integrated mills versus the EAFs, or are we going to try to sell it whole? And it's unclear who those bidders might be. Cleveland-Cliffs obviously had the second highest bid, a $54 cash and share offer back in December of last year. But since then, they've bought another company, and they've also had a lot of trouble throughout the year because pricing has been down, and there are questions of whether or not they can afford to make other acquisitions. So I think a lot is still up in the air, especially as, I mean, the dust isn't even settled yet.
What is the problem with steel? I mean, people need it to make stuff, right, Joe? We have some car manufacturers in this country that use a lot of steel. Is the problem that it comes in cheaper from Asia? And if so, wouldn't tariffs address that issue?
Listen, I think to answer your question, Matt, I think you need to look at it at a company-by-company basis. If you're talking about Nucor Corporation or Steel Dynamics, people in the markets look at those companies as very strong companies, A+ bond ratings. They're dependable. They don't have to do massive shutdowns because of the way EAFs work. You look at U.S. Steel, for example, though, and they haven't really done massive upgrades to some assets. As we point out in the Mon Valley, that's the same asset that traces its roots back to Andrew Carnegie back in the 1900s, 1901. So I think it is more a company question. Remember, the United States still consumes 65% of the steel that we consume in the United States is made in the United States. And then we produce over 100 to 120 million tons of steel per year. So I think oftentimes it does get lost, especially because the former president, President Trump, had often said that the industry was dying. It, in fact, isn't dying, but it does, when you look at companies like U.S. Steel, there are massive questions by investors because so many of the assets are so old, and there are questions around the labor costs and everything else that goes with it.
All right, Joe, great to have your insight and your reporting here. That is Bloomberg's Joe Doe. And this is an interesting one, guys, because it's being blocked on the basis of national security, which is a really broad church at this point. You can make a case for TikTok, of course. You have all of this American data, but national security in this deal, Japan is an ally.
I was thinking that with the relationship becoming ever closer. And that's why, for me at least, I am continuing to watch it. If they're going to dispute the decision, then what happens? You have to remember also that you have the stock trading in the 30s now, so well below what Cleveland-Cliffs was offering back then, which would, in theory, make it more attractive to maybe other buyers.
Yeah, I mean, Japan is an ally, but you want to keep certain industries within your own borders.
I guess if U.S. is in the name, ideally, it would remain American.
Right, and especially if you're running on an America First platform.
It's a split.
On the other hand, you know, Donald Trump was against Bitcoin. Now he's its biggest, you know, fan. Donald Trump was against TikTok and the Chinese spying on us through that social media app. Now he's pushing to keep it Chinese. So
the strategy I'm taking into this year is anything goes. You don't know what's going to happen. All things can change.
We'll see, of course, and maybe Terry Haynes will be proven right. But in any case, coming up in the next hour, we'll speak to the CEO of another industrial firm, AGCO, and we're just 8 minutes away from the market open, so don't go anywhere. This is Bloomberg.
Kickstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling.
Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Bringing you up to the minute economic news whenever and wherever it happens. I'm Jennifer Zabasanja in Luanda, Angola, and this is Bloomberg.
Bloomberg brings you breaking news 24 hours a day, powered by 2,900 journalists and analysts in more than 120 countries across the globe. Bloomberg Television. Context changes everything.
David Weston, join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, is emissions.
Done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg Television.
Welcome back to Bloomberg Open Interest. A check on futures as we count down to the opening bell. You can see there's green on the screen. We had the exact same setup yesterday morning, though, and we know how that ended. But at least for right now, the S&P 500 higher by about 0.5% in the pre-market. The NASDAQ 100 a little bit better. The Russell 2000, an interesting one. This index, the small caps, actually ended very slightly positive yesterday. That was your outperformer. Not quite your outperformer today, though. The Russell 2000 currently higher by about 0.4%.
It did actually massively outperform the S&P 493 last year and the year before. Do you see the data track note?
Fascinating. I missed that part of it.
Yeah, so Nick Collis and Jessica Robert Data Track pointed out that if you take out the Mag 7, the Russell 2000 did better than the rest of the index.
But it's down 4.5% since the Fed cut rates on December 18th. In any case, the opening bell, less than 4 minutes away. Don't go anywhere. This is Bloomberg.
Offers before to take over Greyhound, but then in the middle of the pandemic 2.5 years ago, we had this fantastic opportunity to buy the brand and the network. When we took on Greyhound onto the Flix tech platform for network management, revenue management, we saw the highest unit economics in more than 100 years of Greyhound history.
My vision is to transform long-distance bus travel in the United States and make it one of the top considerations for anyone planning a long-haul journey.
CEO Kai Boyson imagines even more potential if state and local governments recognize the need to support long-distance bus travel with integrated infrastructure.
We need to think about the infrastructure in the United States holistically. And think about the transportation system as one integrated system. An intercity bus needs to be an integral part of that system. One should be able to connect from one mode of transport to another seamlessly, easily. We have great success models in the United States. For example, Los Angeles Union Station, Boston South Station, or New York Port Authority Bus Terminal, or Washington, D.C. Union Stations.
Kai and the team, they are doing a fantastic job. They have really improved the product, they have improved technology, they have really made the production more efficient, that at the moment it's also a profitably growing business.
There is this real momentum from Wall Street. We are basically deep in the European earnings season. Take a look at how we're faring when it comes to Asian markets.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
All right, we are moments away from the start of trading. This is Bloomberg Open Interest, and futures are up. Although we've gotten this kind of head fake the last couple of sessions, we are now down for 5 trading days in a row at the end of the day. So we'll see if big tech can save us today. You can see the S&P futures up 0.5%, but NASDAQ futures up a little bit more, about 0.6%. The small caps doing worse than both of those, although they're all kind of on the same level here. You can see, or you can see and hear, I guess, the opening bells. By the way, here at the New York Stock Exchange, I have no idea why, but the Professional Bull Riders Association is ringing the opening bell with the Austin Gamblers, who are apparently championship bull riders. I did go to a rodeo at Madison Square Garden once, and it was super fun. Down at the NASDAQ market site, Modern Health is ringing the bell. It's a mental health platform, and as you know, likely, we take mental health very seriously. In terms of the major averages right now, Katie Greifeld is looking at the gains. Katie, what do we see?
I have to fact check, but I think that rodeo at MSG is in January, so something to look into the commercial break. But in any case, we do have green on the screen, of course. You can see that the S&P 500 up by about 0.5%. Big tech, your NASDAQ 100 up about 0.6%, a little bit better here. Remember, yesterday we had Tesla like a weight on the NASDAQ 100 and the S&P 500. You don't necessarily have that this morning, so we'll see if these gains hold. The Russell 2000, like Matt said, this was your outperformer yesterday. Not as much this morning. The Russell 2000 up about 0.4% at this moment, though. Let's take a look under the hood, because we've been talking about U.S. Steel's future as President Biden blocks a takeover bid from Japan's Nippon Steel. Now, shares of U.S. Steel are down nearly 40% since last March, and this blocking wasn't necessarily surprising, but it is surprising to see that they're surprising the shares, currently down about 7.6%, Shanali.
Merger arbs absolutely getting killed on that one. We're going to talk now about a bid building even more in Rivian, though, because shares are climbing after reporting fourth quarter deliveries that topped estimates. The company also says supply chain shortages are no longer an issue. Matt, we're going to talk more about electric vehicles in this show.
Yeah, absolutely. Looking forward to that. And Meta is replacing Global Affairs President Nick Clegg with his deputy, Joel Kaplan, who happens to be the company's most prominent Republican. Let's take a closer look at what's going on with Meta. For that, we go to Washington, D.C. Bloomberg's Mike Shepard is standing by. And this is an interesting move, Mike. Is this just preparation for the Trump administration?
Well, it very much is, and a lot of companies are really engaging in that kind of introspection as we await Trump's inauguration in less than 3 weeks. But Meta has more introspection, perhaps, to do than other businesses. They have really locked horns with Trump over the past couple of years. This misunderstanding with Republicans goes back a long ways. Republicans have accused Meta and other social media platforms of what they call censorship, that is suppressing conservative speech. They haven't provided a whole lot of evidence for that, but it is added to these misgivings between Meta and the incoming Trump team. Now, Trump also got crossways with them after he was banned from Facebook following the attack on the U.S. Capitol on January 6, 2021. By his supporters. And as recently as the campaign earlier this year, we heard Trump calling Facebook the enemy of the people. And he also suggested that he might even look to reverse the looming ban on TikTok as a way of undercutting Meta too. So there's a lot of ground for this company to make up here.
He did though donate. I mean, Zuckerberg donated like $1 million to Trump's campaign, though, right?
Well,
so he's trying to pay that off.
Yes, he did. Nearly.
Yeah, it's not exactly Musk levels here, but still, it's symbolic. And of course, Mike, he did have dinner at Mar-a-Lago last month, I believe. But let's talk a little bit more about what Joel Kaplan's actual mandate here. What are some of the potential specifics that Meta is trying to accomplish here with the donations, with the dinners, and of course with this this elevation of Joel Kaplan?
Well, there is a purpose to all of this, and his predecessor, Nick Clegg, a former deputy prime minister in the UK, had his own mandate, which was really to try to shore up Meta's reputation in Europe and the US, but in a different way. And here we see with Kaplan, he will be trying to rein in maybe some of the regulatory moves that could be coming against Facebook from a Trump administration. If Trump were to try to go after Facebook, he is someone who is known to go after anyone who opposes him. So by keeping the Trump team close, Kaplan will be able to fend off some of this oversight. And that includes on competition, on questions about child privacy, and it also includes concerns that they may be engaging in the kind of content moderation that Republicans have claimed, as I said, border on what they see as censorship.
All right, Mike Shepard, great to have you with us. Of course, a really fascinating sign of the times coming from Meta. That is Bloomberg's Mike Shepard. Let's turn now to the broader markets and to another Michael. His name is Michael Kantrowitz. He is Piper Sandler's Chief Investment Strategist. Great to have you with us. Happy New Year. I want to go straight to one of the opening lines in your most recent note, and that is that equities should see positive gains as long as the 10-year yield and the unemployment rate remain below 4.5%. Those feel like two big ifs, Michael. How much conviction do you have that we will get those positive gains?
Well, I think we're going to see a more volatile year. You know, we've had two back-to-back years where, you know, we've had 20% increases in the equity market, obviously coming off of 2022's bear market and big increase in risk because of inflation. The market went through 2 years of basically pricing out the risk of a recession, the risk of higher interest rates, higher inflation, getting us to this point now where multiples are really high, credit spreads are super tight, and investor sentiment is fairly optimistic. And so the starting point for this year is a lot different than certainly 23 or even last year. And that I think leads to a backdrop where PEs probably are flat, potentially lower, in a backdrop where earnings are probably going to grow, but not meet the lofty expectations of about 15%. So, you know, right now we're obviously above the 4.5 level on the 10-year. And this is something we've been writing about for the last few months, and the markets have certainly struggled in the face of that. If, you know, next week we get a lot of labor data, and perhaps that could put in the peak of the last 3.5 to 4 month move higher in interest rates and provide some upside for both bonds and stocks.
So we're watching the data closely, clearly, but I want to talk about levels here because clearly 4.5% was a significant moment for investors to experience again on the 10-year, but now more and more investors and strategists, you had Julian Emanuel at Evercore ISI, you have Nick Kolos at DataTrek just this morning, watching that 5% level. What's less clear to me, Michael, is if we hit 5% on the 10-year, what is the spillover effect? Is there an expectation here that you could see any percentage point drawdown here in the S&P 500 that's on your mind?
Certainly. You know, what we saw the last two times when markets struggled with higher rates, this was back in April of 2024, and then again in the summer of 2023. Once we hit the point where equity and interest rate correlations turned negative, basically stocks started falling until interest rates found their peak. So I would expect if yields continue to move higher and certainly to 5%, which is a pretty big move, that would be a backdrop that gives us a correction basically until we see a peak in interest rates. You know, I think what makes it, what's compounding this is it's not only interest rates moving higher, it's of course the dollar moving higher. And if we look at the U.S. broad trade weighted dollar index, which includes all the emerging economies, and represents a good reflection of global trade, that is at an all-time high today, going back to the 50s and 60s. And in addition to that, this last Fed meeting, to me, changed the narrative with expectations to policy easing. In most of the client meetings I've had since that last Fed meeting, I've gotten the question if the Fed is going to potentially raise rates this year. So just the fact that investors are thinking about that is a big game changer and sentiment changer from where we were only, 3 months ago in September, expecting a lot more rate cuts this year.
So if everybody, Michael, it seems like everybody is fully invested. Certainly households are more invested than they've ever been. International investors are fully invested in U.S. stocks. Institutions are holding a lot of U.S. stocks. And we're worried about the Fed raising rates, and we're likely going to see companies miss earnings expectations, right? Unless you believe they're going to do 15% earnings growth this year. Isn't that bad news for the broader indexes?
Well, it's problematic really for multiples. Even if earnings growth doesn't increase 15%, which is the current consensus expectations for this year, if we grow 8 to 9%, that should still lift equities 8 to 9%. The question, though, is in that backdrop, will multiples compress? And I think that has more to do with, again, interest rates and whether or not they keep moving higher, or perhaps we get a pocket in the next couple of months of softer data, rates come down, provide some relief. But if the unemployment data continues to tick up for more than a couple of months, then we potentially get back to a growth scare, which we last had in August. And then we see a backdrop where rates go down and stocks go down. I don't think we're quite near that risk today, but that's kind of how I see things evolving throughout the year. I don't think, like we've seen in the last 12 months or so, there's been a lot of narrative volatility. Every 3 to 4 months or so, we've seen these upturns in bond yields and then followed by 3 to 4 months of lower bond yields, again, on the back of softer employment data, which completely flips the narrative. And the data dependency of the Fed and investors has just exacerbated this narrative volatility that we've seen.
Michael, we thank you so much for joining us today. Of course, to start off the year, a lot of investors thinking about their risk appetite. That is Piper Sandler Chief Investment Strategist Michael Kantrowitz. Now, coming up, a shakeup across auto stocks as President-elect Donald Trump threatens to spike tax credits for electric vehicles. Yet Rivian is seeing some good news on deliveries for itself. We'll talk about it all, put it together for you next. This is Bloomberg.
So a number of people, I think from Homeland Security and or the CIA or NSA, have gone to Capitol Hill and said that TikTok is a danger to our national security. But the public hasn't been given that much detailed information about what the threat is. How much of a threat to our national security is TikTok?
The People's Republic of China acts adversely to the interests of the United States in different ways. One of those ways is through the dissemination of disinformation, the intentional communication of false statements. And TikTok is an extraordinary avenue through which to disseminate disinformation to millions and millions of people.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
As we spend some time here on the broader presidential race,
Let's focus in on European politics.
Makes you wonder how politics might play out.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
All right, it's time now for Top Calls. Some of the analyst action in focus this morning. And first up, Wolf Research is downgrading Bumble, saying that the dating app is no longer a buy. The analyst expects more competition in the dating industry, and she has concerns about the departure of the company's longtime CFO. Next up, the homebuilder Pulte Group is getting upgraded to a buy over at Wedbush. The analyst says that the sell-off in the stock is overdone and cites a favorable customer mix. And finally, we have Raymond James turning bullish on digital payments firm Block, raising its rating on the company to a buy. The analyst expressed renewed confidence in the stock's growth story. And you can see shares currently up about 3.5%, Matt.
All right, so that's a look at some of the movers and shakers on calls. Right now, let's look at cars. Americans that are considering switching into an electric vehicle may have made their purchase after Donald Trump won the election. The president-elect's threat to axe EV tax credits looks like it gave the sector a boost with 12% growth last quarter. Joining us for more is Bloomberg Detroit Bureau Chief David Welch. And David, before we get to those who won't get the credit this year, let's talk about what happened at the end of last year. If you thought it was going to end, did you rush out and buy an EV?
I think some people probably did, but I also think that some of the growth that I think we're going to end up seeing with electric vehicle sales in the fourth quarter is just there's more on the market. There's more variety. And specifically, General Motors had a lot of new models that really got greater production. The big one being the Chevy Equinox, right? This is a vehicle that starts around $35,000 and even better equipped is around $40,000. You put a tax credit on that and you can get it for under $30,000. That's a cheap vehicle even for one that runs on gasoline in a market like this where vehicle prices are still at historically pretty high levels. So you get more variety of vehicles out there. Some of them are pretty cheap and you're going to see more volume. But look, I do think for those paying attention to the political scene, if they think that $7,500 is going to go away, especially for lease deals, yeah, go out and get one now while the getting is good. Because at the same time, there were a lot of deals offered by the automakers. So GM with some 0% financing deals on EVs, and you saw discounts elsewhere from other companies, including Tesla. And so you add all that together, and I think we'll have pretty strong EV sales once we see the final numbers come out today.
When you're thinking about EV sales as well, how do you think about this across companies, the incumbents and the contenders here? Because Rivian, of course, surprised on their delivery number, but more than 14,000 deliveries when you think about that compared with, even with Tesla disappointing, almost 500,000. How do you think about the catch-up game?
Look, Tesla's still the huge player here in this market. It's just taken all the other companies in the U.S. anyway a long time to catch up to them. China's a different story for Tesla, but here, you're really looking at Ford, GM, and Hyundai as being the players that are going to be chasing Tesla. And I think as Ford kind of reins in its electric vehicle ambitions and their plans, the two that are really pushing with a lot more models on offer and some lower prices is going to be GM, Hyundai, Kia, the two Koreans that are really chasing Tesla. Rivian's numbers are still pretty small because the vehicles they sell are still pretty expensive, even though they've dropped prices. You're looking at $75,000, $80,000 for a mid-sized electric pickup truck and SUV. It's not a great value proposition.
Even used, by the way.
People like the product. Yeah, it's just not a cheap vehicle. They've got some, they're working on lower price vehicles, but right now, their sales were down, or rather their production was down a bit. They've had some production issues as well, but they're still looking at roughly 50,000 vehicles for the year. That's tiny compared to what Tesla does, and pretty small compared to even what some of the legacy car companies are building and selling right now.
Completely anecdotally, I do feel like I've seen more Rivians on the road, though. When
then
I drive,
Cybertrucks?
I see a lot of Cybertrucks, actually, when you drive between New York and New Jersey and upstate New York. But in any case,
I'm always happy when I see one. I'm excited when I see a Rivian.
I'm excited when I see a Cybertruck, when I see a Rivian. But David, I saw my first Lucid on the road the other day, and I thought that was really interesting. I almost crashed my car because I've never seen one before. And you take a look at Lucid shares. I mean, they're trading for just above $3 right now. Not exactly soaring heights here for these pure play EV makers who aren't Tesla and who aren't a legacy automaker that's coming into the EV space. I mean, how dire is the outlook?
Look, it's just tough for Lucid and Rivian at the prices that they're selling vehicles to get a lot of scale. And, we're seeing EV sales taper off. I mean, there's still growth there, but you're talking about companies with very small market share in a segment that, is kind of hitting let's call it the flat part of the S-curve here. We had rapid growth in EV sales for a few years, and now, the customers who want to do right and get, something that's green, or EVs are great luxury cars because they're quiet and fast, like all luxury cars are. A lot of those people have their EVs, and it's a matter of getting them to buy a new one or win over some other customers who are worried about charging and that sort of thing. So it's a tougher marketing challenge for all companies to sell EVs right now because you're trying to get into the mass market and people who maybe think about EVs but aren't dying to get one. And, the biggest thing to overcome, I've been kind of thinking about this for a while, is people are pretty happy with their gasoline-powered vehicles, so you got to kind of pry them away from that. And so that's the challenge for somebody like Lucid and Rivian, who are selling expensive vehicles. So they're in the luxury game, and that's where competition is really tough, no matter what you're selling. And it's going to be tough for them to get scale. And they don't have an internal combustion business that's cranking out billions in cash like Ford and GM do to carry the water. So investors are going to kind of take that into consideration as well.
David, we thank you so much for your time. That is Detroit's Bureau Chief, David Welch. And of course, I get excited just when I see the charging stations. Isn't that half the problem?
You are happy with your gas-powered vehicle, though, aren't you?
For now. We'll see how the future goes.
I will repeat what I said yesterday, which is that Alex Roy drove across country in a Tesla, so from New York to California, full self-driving, and he only had to charge up for 6 hours. That's pretty shocking.
I don't know. I think plug-ins are the future, not that Tesla, as we learned yesterday, is likely to ever do that.
Speaking of the future, we're going to switch gears. Coming up next, we're going to talk about the future of the hedge fund industry because many of them posted big returns in 2024. Details next in our Wall Street Beat. This is Bloomberg.
A multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Time now for the Wall Street beats. The most read on the Bloomberg terminal, multi-strategy funds of all sizes had double-digit gains in 2024. Macro hedge funds like Discovery and Point State also performed well, with some funds posting returns of over 50%. We're going to bring it down with Bloomberg's Nishant Kumar. Rob Citron over at Discovery, Zach Schreiber over at Point State. You had 52% and 48% roughly, respectively here. These strategies are not for the faint of heart. Can macro keep performing in 2025?
Well, first of all the macro hedge funds should send a gift to Donald Trump, who changed the game in November. Some funds made huge amounts of money just in the first and second week of November. Take, for example, Chris Rogo's. He printed $1 billion in a single day. And if you look at our ranking of top 5 hedge funds, it's not a ranking. Essentially, we have published the returns that we have got. Out of top 5, 4 are macro hedge funds. And the trades like long stocks, dollar, short bonds, Bitcoin, they have all contributed massively to these returns. And analysts are telling us, and even the hedge funds are telling us that these trades are going to continue well into 2025. So yes, looks like this year is set for macro traders.
Nishant, what do you need to get an edge in macro trading, for example? Does size matter? Do you need one genius? Is it important to have a huge firm of research analysts? What's the key?
Well, lots of conviction and experience, probably. So some of these traders, they have 2-3 decades behind them. They have seen all the cycles, how the markets perform, react to different market conditions. So first you need, experience, you need high conviction, and then maybe smaller size to navigate this market. So Discovery is just $2.5 billion, for example. But on the other hand, you have Chris Rogo's, who does manage $19 billion, and he has, printed more than 25% return so far this year.
Nishant, great having you on the program.
It's amazing. Matt, some of these funds have done the best since 2020, including Izzy Englander and Exodus Point. So
best since 2020?
Yes, wow. Incredible.
That's impressive.
It is.
Yeah. Coming up in the next hour, Brooke May of Evans May Wealth joins us. We'll ask her why she's cautiously optimistic about the stock market this year after back-to-back 24% gains. This is Bloomberg.
recent years, you created an institute, the Jane Goodall Institute, and what is that designed to do?
Well, that was started in 1977, when by then I had a little research station.
and 4 of my students were kidnapped, and everything shut down. And so some friends of mine said, well, let's start an institute so that this research can carry on. Bless them. So that was 1977, and it was set up to study, conserve chimpanzees and other animals and educate. And it's developed since then. So it's, you know, we've got 27 Jane Goodall Institutes around the world. And then I realized at some point that the African people living in and around chimpanzee habitats right across Africa were struggling to survive. There was crippling poverty, lack of health and education, moving deeper into the forest, being exposed to diseases like Ebola and HIV from the chimpanzees and vice versa. It hit me. If we don't help these people to find ways of making a living without destroying their environment, conservation won't work.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern. Only on Bloomberg. Context changes everything.
CBS News on the Hour, sponsored by Progressive Insurance.
I'm Michael Wallace. On this first day of the 119th Congress, House Speaker Mike Johnson is battling to keep his title. He just arrived on Capitol Hill and says he's hoping the leadership vote goes in his favor and quickly for the sake of America.
They are expecting us to get to work. We don't have time for drama.
But CBS's Nicole Killian reports there could be a lot of drama on Capitol Hill today.
Johnson can only afford 1 or 2 defections to keep the gavel. He does have one key backer, President-elect Donald Trump. Trump endorsed Johnson as a good, hard-working religious man and met with him at Mar-a-Lago on New Year's Day.
The FBI is piecing together the events leading up to Wednesday's truck attack in New Orleans. House Homeland Security Committee Chair Mark Green tells CBS Mornings Shamsuddin Jabbar was inspired by ISIS but had no direct contact with the terror group.
Well, it makes me sick to my stomach, to be completely honest. You get these 1 or 2 people like this, and it's very, very heartbreaking.
The White House has announced President Biden will visit New Orleans on Monday. The Surgeon General wants cancer warning labels on alcohol. CBS's Kemi McCormick has the story.
Alcoholic beverages currently carry health warnings for pregnant women and those who may be operating machinery. Surgeon General Vivek Murthy warned today that alcohol consumption increases the risk of developing a number of cancers, breast, colon, liver cancers among them. He wants guidelines on consumption so people can weigh those risks when they drink. Murthy says alcohol consumption is the 3rd leading preventable cause of cancer in the U.S., behind smoking and obesity.
The feds are fining a major airline. CBS's Jim Krasula has details.
It's a first for the U.S. Department of Transportation. The federal agency has fined JetBlue Airlines $2 million for chronic flight delays. The DOT says JetBlue has used an unrealistic flight schedule that affected passengers and reduced airline competition.
JetBlue has fired back, saying the government needs to modernize the air traffic control system. President Biden has blocked the proposed purchase of U.S. steel by Japan's Nippon Steel, citing national security. Supporters say the $15 billion deal would have pumped new life into the U.S.'s steel industry. CBS's Mark Strassman is in Plains, Georgia, where they're getting ready to bid farewell to former President Jimmy Carter.
Jimmy Carter lived here most of his life, both before and after his presidency. And tomorrow morning, a hearse carrying his body will drive to the peanut farm that was his childhood home. A farm bell will toll 39 times for the 39th president.
Later tomorrow, Carter will lie in repose at his presidential library in Atlanta. Strong start to the trading day, where the Dow's up 96 points. The S&P, trying to snap a 5-day losing streak, is up 32 points. This is CBS.
the Ad Council.
The Hollywood Awards season kicks off Sunday with the Golden Globes on CBS.
Netflix Emilia Perez goes into the Golden Globes as the most nominated film. It's up for 10 awards, including Best Comedy or Musical. But Wicked could triumph. The Brutalist is a critical favorite for Best Drama.
Tell me, why is an accomplished foreign architect shoveling coal here in Philadelphia?
On the TV side,
I'm Eugene Levy.
I'm Eva Longoria. It's a battle between Murders in the Building, The Bear, and Shogun. Deborah Rodriguez, CBS News.
The State Department has released its annual list of the gifts the president and his family received from foreign leaders. First Lady Jill Biden got the most expensive gift, a $20,000 7.5-carat diamond from India's prime minister. She also got a $14,000 brooch from Ukraine. The president's priciest gift was a $7,100 photo album from South Korea. Michael Wallace, CBS News.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, good Friday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We are streaming live on YouTube as well, so you can head over to youtube.com/Bloomberg Podcast, and that's where you'll find us. Coming up, we're going to check in on those markets. We've got some green on the screen here today. We're going to get the latest on this House Speaker vote coming up later today. Mike Dorning, Bloomberg Congressional Editor, he's going to join us and fill us in on what's happening there. Walter Todd, President, Chief Investment Officer, Managing Director of Greenwood Capital, to give us his market call. Michael Shepard, Bloomberg Senior Editor in Washington, D.C. We're talking about this Nippon Steel deal. Apparently, President Biden has said, nope, Nippon Steel, you're not buying U.S. steel. So that apparently is not going to happen. We'll have the full reporting there. Henrietta Trez, Managing Partner at Veda Partners, she's going to join us to give us everything we need to know about Washington, D.C. Apparently, Congress is back in session. Doesn't that give you confidence?
Huh? What?
Yes,
what?
exactly.
What's happening?
Exactly. Congress back at work, so we'll have all that for you. Right now, let's get a market check here. We'll do that with Mr. John Tucker. John.
All right, we are data dependent, so let's start with the data. ISM manufacturing, this is the second biggest part of the economy. Manufacturing, 49.3. Remember, the dividing line is 50 between expansion and contraction. Still contractionary territory, 49.3, but better than the survey estimate. Right now for the stocks, 8 of the 11 major indices groups in the S&P 500 higher in the early going. Communication services, the best performing group. That's home to Google parent Alphabet and Meta Platforms. Then you have shares of United Steel. They are lower after the White House blocked the acquisition by Nippon Steel. U.S. Steel shares 7% lower. Here's a buzzkill. Shares of Constellation Brands, Anheuser-Busch InBev, other makers of beer, wine, and spirits falling after the Surgeon General issued a new warning on the links between alcohol and cancer. After a sour, no comments, please. After a sour few sessions to end the year, Mike Wilson, Morgan Stanley's chief U.S. equity strategist, is looking ahead.
I do think the first half of 2025 will probably be a bit more challenging. And then the second half sets up pretty well, assuming that, forecasts around the economy and earnings come through.
Right now, we have the S&P 500 43 points higher. That's up 0.75%, 59.12 with the index. Dow Jones Industrial Average up 175 points. The NASDAQ 100 233 points higher. That is up 1.1%. Oil fluctuating near the highest level in almost 3 months.
That's what I want to ask about.
Yeah, NYMEX crude right now up 56 cents, 73.70 a barrel. I'll call that American crude. And yes, filling up at the Wawa, up to $3 a
that
gallon.
Is not good.
Now, New Jersey, that is New Jersey, and the gas tax went into effect January 1st, but that was only 2.5 cents, I think. But it's been quite a spike.
I mean, there was a drop in crude stockpiles, so there's a little bit of bullishness maybe in the market, but,
I thought we were like the huge producer of...
Yeah, but if you're drawing a stockpile, it means that you're using it. So that means
do we even need those, the strategic petroleum
reserve? Mm-hmm.
Do we need that anymore if the United States is the top?
Absolutely.
I think that's up for
because
debate.
we used it.
We used it and we needed it to get those gasoline prices you love to quote down past $5 a gallon. Anywho, I think it's worth mentioning this ISM Manufacturing, that 9-month high, but in it, new orders rose the highest since January. And I wonder how much of this may or may not be related to potential tariffs coming, and if we're front-loading stuff. I don't know. I'm genuinely asking if we're front-loading here, because the employment part actually fell to 45.3. Anyway, really interesting stuff there. Love that ISM data. Let's get some more now from D.C. We are just a couple hours away until we get a vote for House Speaker Mike Johnson. Mike Dorning is Bloomberg congressional editor, and he joins us now. Give us the tick-tock of what we can expect.
Well, Congress will come back at noon, and the first thing they have to do after that, prayer and Pledge of Allegiance and all that, is to vote on a Speaker of the House. And it's not clear that Mike Johnson has enough votes locked up yet, although there's no real rival for him.
So how is this going to play out? Is it, if I'm a Republican, why wouldn't I vote for him now? I've got my Republican president telling me to do that. I would think I'd want to get moving with my majority in Congress and start getting stuff done. Why would Republicans not support Mike Johnson?
So there's a group of Republicans, a pivotal group of Republicans who have a lot of influence right now because this is the second smallest majority ever to control the House of Representatives in U.S. history, smallest in almost a century. And basically, they cannot afford to lose 2 votes, 2 Republican votes, and then if all the Democrats are there and voting, then they lose. So they have a lot of leverage, this small group of fiscal conservatives who want more spending cuts and don't want to raise the debt limit unless there's deep spending cuts, who are dissatisfied with Johnson for negotiating with Democrats to prevent government shutdowns before. And they have a lot of leverage right now to try to get some process reforms. And they're talking with Johnson and trying to get some concessions. But you're right. President Trump, he's publicly endorsed Johnson. He hasn't done a lot for him yet, but if this drags on and starts to delay certification of his presidential victory, you can bet he'll turn up the heat.
So I appreciate, Mike, the fact that there are a couple holdouts or those that want to force other issues on the table, but there is no other option, right? Like there's no other candidate being floated, right?
There's no other Republican candidate that's being put forward right now. If this became a problem, there are 3 guys who are in the wings ready to be Speaker if they could get enough support. But each one of them has their own set of problems, and they're basically the number 2 leader, Steve Scalise, the number 3 leader, Tom Emmer, and Jim Jordan, this sort of bombastic judiciary chairman. But all of them have problems with either some conservatives or some of the Republican members who are in more swing districts. So none of them have an easy road either. So the most likely thing to happen is the holdouts use this leverage to try to get something, whether it's before the first vote, seems unlikely but possible, or before a subsequent vote, and then somehow it all works out in the end.
Yep. All right, there we go. So we'll pay attention to that today, because who doesn't like following what's happening in Congress? Mike Dorning, Washington editor, it's his job. He has to do that. So we can just check in with Mike.
Can just ask him questions and then move on.
And then move on. Mike Dorning, Washington editor, Bloomberg News, joining us from Washington, D.C. So we'll have full reporting on that throughout the day. Let's see what's happening in the markets. Again, we've got green on the screen here. The S&P up 0.6%. The NASDAQ up just about 1% here today. So some good gains. Let's see what's happening under the hood. Carmen Reineke joins us. She covers the equity markets for Bloomberg News. She joins us here in our New York City studio. Carmen, what are you looking at today?
Yeah, so the first thing that I'm looking at, I think this is one of the biggest stories today, is shares of U.S. Steel, ticker X. They're down about 7.6% right now. This is the worst one-day drop in about 3 weeks after President Biden blocked the sale to Nippon Steel Corp. Obviously, this is something that's really been an overhang for the shares over the last year. It was sort of largely, I think, expected that Biden would block the deal. But just to note, shares of U.S. Steel were down 30% in 2024. So it's sort of unclear what will happen next. They're potentially going to sort of have to start over on another deal. or they're going to have to sort of challenge this decision.
Which is so weird that it's down so much, because like I would have thought it was already baked in. Like this to me seemed not a surprise, particularly as the question marks over whether President Trump is going to overrule it or not. But anyway, that's total side note. What else are you looking at?
Yeah, so the other thing I'm looking at, shares of Rivian are really taking off right now. They're up.
Are they revving up?
They are.
Is Rivian
they are
revving?
rivving up. They're up about 18% right now. This is the best intraday move since November. So the company reported production numbers for the fourth quarter that beat the average estimate. Also, the full year production numbers were sort of in line with what management had said. I think it's important to note that in October, the company lowered its expectations for full year production values. So they're kind of coming in line with, you know, an already sort of depressed figure. And shares of the company were down more than 40% last year as well. So a good day today for Rivian, but I think still sort of, you know, overall not.
And Tesla trading up a little bit. The Tesla's up at 1.5% today.
Well, also because some of the car numbers are coming in, they're not terrible. And the Cybertruck now eligible for the tax credit. Ford is coming out with their total number of sales for the fourth quarter up 17%. So like, you know, less bad. Let's put it that way.
Totally.
What else are you looking at?
Yeah, so the one other thing that I was looking at, so Cerence, ticker CRNC, is up 64%. This is a small company. It does sort of voice AI actually in automotive and transportation. So like think what you're talking to in your car. So basically it's up 64%, also the most since November, after it announced an expanded collaboration with NVIDIA to make better AI models.
All right. So anything AI getting a little bit of love as it typically does. Carmen Reinke, thank you so much for joining us. WTI crude oil, I'm just not buying it. Why is it? I mean, we were sitting in a trading range. I guess we're still kind of in that trading range, but it feels like it's kind of breaking out a little bit. I'm not sure why.
Yeah,
on WTI.
I mean, positioning,
I think it's
quants.
Positioning, quant. Because to me, I'm always trying to get a feel for the demand side of the equation. I kind of feel like, the U.S. is producing this amount, OPEC's producing this amount. We already know what's happening with Russia in the Middle East. So to me, it's always about the demand. And
oh yeah,
I don't know. Is demand picking up?
No, China's not great. I think everyone kind of knows that. But you know, I mean, you get quants, you already really low. Like I'm not taking the moves that seriously. Like I mentioned, the stockpiles drawing. So here's what I'm looking at. Are you ready? Are you excited?
Yes.
So the U.S. released its final rule on clean hydrogen production tax credit.
Wow.
45V, baby. This is actually a really big deal. And this is all the top performing stocks right now on the S&P are all moving related on this. It expanded what you have to produce your hydrogen with, how you power your hydrogen and the equipment, whether you're looking at like natural gas or you're looking at renewable fuels or you're looking at wind, that has now been decided, and it's a big
Somebody told
deal.
me like the hydrogen cars were like, no, that's not even going to be a thing. That's not true, is what you're saying now.
Hydrogen car? I have no idea about a hydrogen car. But you can use hydrogen to make like ammonia and other stuff, and then that can just be put right in to some tanks. You can make e-ammonia if you want to. But the electrolyzer where you split the water and the oxygen is really, really, really power intensive. So how you power that then determines how much money you get from this tax credit. And they
Remember, that was like one of the first experiments you did in chemistry lab was like, the water and collect the hydrogen.
No, I don't remember that. I remember the dissecting a frog.
Well, that was biology. I'm talking chemistry.
Yeah,
and then
it's
you
all
would
the
light
same.
the test tube and pop.
I didn't do that.
Of course, we had a gigantic beaker, and then the whole thing exploded.
You sure this wasn't the Muppets? This wasn't like in a Muppet show? This was real?
With beakers.
With beaker? Yeah. Beaker. Anyway, we have much more coming up. Walter Todd, President and Chief Investment Officer, will be joining us. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Yeah, I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. After a 5-day losing streak, stocks higher right now, being led by shares of the mega techs. Factory activity increasing for the second month of December. The Institute for Supply Management's manufacturing gaze rising to 49.3. This is the highest level since March, but still below 50. That's the dividing line. So that indicates activity continues to shrink. And just getting word from Ford Motor Company right now, 2024 total fourth quarter sales up 9%. The EV sales up for the entire year up 38%. We'll give you a little more context on that. Still, right now, Ford shares, they are a little changed to lower. First of its kind enforcement action, Long Island City-based JetBlue Airways slapped with a $2 million fine by the Transportation Department for routinely delaying some flights and setting unrealistic schedules. Right now, the S&P 500, 24 points higher. That's up 0.4% at 5893 on the index. The Dow Jones Industrial Average up 86 points. The NASDAQ 100, 119 points higher. That is up right now 0.5%. Two-year yields, they are unchanged, 4.24. The 10-year yield also unchanged at 4.56. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Paul and Alex.
All right, JT, thanks a lot. Alex Steele, Paul Sweeney. This is Bloomberg Intelligence Radio. We are broadcasting to you live from our Interactive Broker studio right here in Midtown Manhattan. I want to go back to that ISM. So hitting a 9-month high. New orders, the highest since January. Employment, though, did fall. Production, though, jumped. It looks all in all to be a relatively solid number. So I want to get more on this with Walter Todd, President, Chief Investment Officer, and Managing Director at Greenwood Capital. So the second I wound up seeing this number, I thought back to something that Torsten Slok of Apollo had written about, saying that the Fed cuts and the financial markets will actually boost GDP over the coming quarters by 1 percentage point and boost inflation by 0.5 percentage point. Would you be prepping for that at all?
Well, Alex, good morning. Happy New Year. Thanks for having me. So I think this is the dynamic of the market and the balancing act here. Going back to that report you just referenced, the prices paid component of that was higher. So we had new orders higher, the top line number higher, prices paid higher, but employment lower. That's not a good combination of seemingly a slower employment market, but yet higher inflation and potentially higher GDP. When you look at the GDP now forecast for the fourth quarter, it's about 2.5 to 3%. So the economy seems fairly solid on the surface, but the labor market is key, and the report we get next Friday is going to be a big one for the market.
So, Walter, how are you guys thinking about this Federal Reserve here in 2025? It looks like the market's kind of discounting maybe 2 rate hikes. Does that seem reasonable to you? What are you guys thinking about?
Yeah, so that's in the fourth quarter of 2024, the biggest shift obviously was the Fed expectations. September, when they cut 0.5 point, we had 7 to 8 cuts baked into 2025. Now we have less than 2 baked in. The first one coming in June. Again, it goes back to the labor market. If inflation can kind of stay where it is to moderate, and the labor market stays solid, I think 2 is probably the right number. My guess is that the labor market continues to weaken a bit as we move through the course of 2025, and that's going to force the Fed to maybe shift again their narrative as they did in December, and we saw that pretty violent market reaction over a 24-hour period with the S&P down 4%. So I think that's one of the many unknowns for 2025 is, can the Fed stick with that 2-cut outlook, or are they going to have to shift again if the labor market and the economy weakens as we move through the year?
In some ways, that feels really binary. So how do you position for that?
Well, I think it goes back to a couple of things. Diversification, which has been a dirty word for the past 2 years. You wanted to be concentrated in 5 to 10 names to outperform the market. But I think having diversification among different sectors, different industries, even different geographies, again, ex-U.S., another dirty word for the past number of years, looking outside the U.S. where valuations are much cheaper is a potential opportunity there. I think also, rebalancing and being disciplined with asset allocation. If you've been fortunate enough to be overweight stocks for the past 2 years, you're more overweight than you were 2 years ago, significantly. So using this opportunity and strength to rebalance a portfolio and pick up some still very attractive fixed income yields, whether you look at treasuries or corporate bonds.
All right, let's go there, Walter. I'd love to get your thoughts on kind of the fixed income opportunities again, because an investor can buy a 2-year treasury and get 4.25%. That seems like an honest way to make a living. Do we take some credit risk above and beyond that? How do you think about credit risk?
Yeah, it's an interesting question because spreads on the surface are extremely tight, the tightest they've almost historically been, whether you look at high yield or investment grade bonds. At the same time, the argument could be made that the balance sheet of Apple or Johnson & Johnson might be better than the balance sheet of the U.S. government. So I think having a blend of high grade corporate bonds as well as some treasuries, but I think the temptation to stay on that front end, particularly with the shift in the Fed narrative, is a big one. But we would use the opportunity of this backup in rates to extend duration a little bit, not go crazy, not go certainly nothing beyond 10 years, but look at that 3, 5, and 7 year part of the curve as an opportunity to lock in some of these yields as they backed up almost 100 basis points since the lows in September.
I'm going to ask the question that I stole from Paul yesterday because it was a good one. Do you stick with what got you here? So is this going to be another year that you got to own big tech?
Yeah. So I think for us, our opinion is we think it's a balance, right? We don't think you abandon. We don't think it's binary. We don't think you abandon big tech, but at the same time, if you've been really concentrated in that area, fortunately for the past 2 years, take this opportunity to rebalance a bit and look for opportunities outside of those areas. Very expensive valuations in those in that part of the market. When you go look at energy or healthcare, again, nobody wanted those in 2024. Very inexpensive valuations. You can find good quality companies with good growth prospects that are much cheaper than some of those big names. So we would advocate for diversifying beyond the top 5 to 10 names.
What's kind of a model portfolio for you guys? I don't know if you have a model portfolio, but like stocks, bonds, alternatives, where do you kind of start from as ground zero for maybe your accounts?
Yeah. So to say the obvious, every investor is unique in terms of what they're looking for in their allocation, but we do like to have a blend of stocks, both large cap as well as maybe mid cap and ex-US allocations there, fixed income, both intermediate and shorter duration fixed income, and also alternatives. We're starting to blend alternatives into that. We've got 2 opportunities to do that. We partner with a company called First Trust that has an alternative suite, but we also have ETF-based portfolios that we have built that utilize alternative asset classes to structure that and incorporate that in portfolios. And I think that's another opportunity as we look forward, again, not looking back at what's worked over the past 2 years, but looking forward, right. There's an opportunity there to incorporate those into portfolios.
All right, Walter, thank you so much for joining us. Appreciate getting a few minutes of your time. It's Walter Todd, President, Chief Investment Officer, and Managing Director of Greenwood Capital, based in Greenwood, South Carolina, which is kind of like right smack in the middle of the state. Looks like a nice town there. Let's switch gears here. Get a little bit more time on this U.S. Steel deal. The stock ticker is X, which I thought would have been Xerox, but it's X for U.S. Steel. There you go. President Biden blocking that deal. The stock is trading down today. Let's get some more news on that. Michael Shepard, Bloomberg senior editor in Washington, D.C. Hey, Michael, why is President Biden blocking this deal? Is this simply a political move here?
Well, it is certainly political. He is also invoking national security concerns and considerations in the order that he released and signed today. It was also part of the statement that he issued to the public saying that he thought it was in the U.S. national security interest to keep U.S. Steel domestically owned and headquartered. And this was one of the key justifications he had been making for months since the deal was announced back in December 2023. This is something something he had expressed opposition to throughout the past year, but he had never come out outright saying that I will block this. President-elect Donald Trump, of course, has done so, and he said that if the deal had ended up on his desk in some fashion or had not been completed by the time he takes office later this month, he also would work to block the transaction. Of course, it's sending the companies back to the drawing board, and we're seeing what it's doing to shares of U.S. Steel today, which are down 7% at last check.
From last I checked, though, wasn't Japan like an ally of ours? So why would an ally present national security risk?
Well, that's a great question, Alex, because usually the committee that oversees reviews of big transactions like this on national security grounds, it's called the Committee on Foreign Investment in the U.S., it's secretive. It also tends to focus on any transaction that could deal more with an adversary rather than a very close ally like Japan. But the U.S. is looking at this as perhaps more a question of will the company's priorities, once merged, diverge from the U.S. national interest. It's a little bit more subtle. But there is a more basic question here at hand, and of course that is the political one that Paul raised at the top, and that is part of the key argument. Biden also said that he is concerned about manufacturing jobs in the U.S., and this is part of another step that he wants to take to ensure that they are not jeopardized somehow.
Is there any sense of what happens next? I mean, what does U.S. Steel do? Is this, I guess they just sit around and wait for another buyer, maybe?
Well, there are a couple of things that are on the table for them. One is going to court, a time-honored tradition now in the U.S., where we see companies taking the government and regulators to court to see if they can overturn a government action. We are seeing TikTok do this right now, trying to get this divestiture ban law voided before it takes effect on January 19th, and we see arguments in that case next week. But for U.S. Steel and Nippon Steel, they have signaled that they may try to go to court. U.S. Steel, if a court move somehow fails, they will then be forced to reconsider their options. Will they look for another buyer? Will they have to maybe shed some assets, some plants, some production someplace? Will it end up costing jobs in some locations? Those are all questions that they're going to have to consider now. Both Nippon Steel and U.S. Steel had insisted that this transaction was necessary to preserve jobs and to maintain production capacity here in the U.S. with some investment coming from Japan.
So, and this also raises the question, in Cleveland Cliffs, if you guys remember, actually tried to make a bid for it. They lost out to Nippon Steel. For a moment, there might be a merger possibility there, but in the meantime, Cleveland Cliffs bought a Canadian producer, so now they're waffling back on U.S. Steel. Real quick, before we let you go, do the union workers, steel workers, want the deal or not the deal?
The union leadership was very much against this. This is very off-brand for them, and in fact, there are clips of Biden from back in April standing with steelworkers in Pittsburgh saying that he was adamantly opposed to the transaction. But some in the rank and file actually took a more nuanced view, and that was that, hey, if Nippon Steel buys U.S. Steel, maybe this will actually help us get the kind of investment that we need to add jobs or at least preserve the ones that we have.
All right, so much for the markets deciding what happens out there. Let's let the government involved. Michael Shepard, thanks so much for joining us, senior editor, Bloomberg News, joining us from Washington, D.C. Shares of United States Steel are off 6.4% today, just about $30 per share. On a trailing 12-month basis, off about 36%. S&P 500 up 38 points, that's 0.6%. The NASDAQ up about 160 points, that's 0.8%. Just a little bit off the intraday highs, but certainly moving higher. 10-year Treasury yields yielding 4.57%. That's up about 1 basis point. A little more coming up. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Technology shares, they are pushing the major averages higher right now. You have NVIDIA, Amazon, Microsoft, Tesla among the leaders. Just parenthetically, January and September are the two least positive months of the year for the S&P 500. So put that in your smoke and pipe and put that in your pipe and smoke it?
Yeah, put it in your pipe and smoke it.
Okay.
Yeah.
A little confused. Just getting word again, Nippon Steel planning to sue over the blocked U.S. steel deal. That was kind of expected. The Biden administration announced this morning was blocking the deal. Shares of U.S. Steel, they are pairing some of the earlier losses right now. The U.S. Steel ticker symbol X, that is down just about 5%. Look overseas right now as China looks at a weaker currency to deal with slower growth. Jeffrey Yu at BNY Mellon says, you know what, emerging markets may be a pretty good spot for investors.
This is an under-owned market. People have been overweight US exceptionalism. If you're looking for diversification, I think EM and EM APAC will be one of the areas to look at. But again, let's look at what the policy is going to be.
Bond yields hitting session highs after the ISM manufacturing index surprisingly climbed in December. Still, though, falling short of the level that would indicate expansion. Two-year yields right now up a basis point. The 10-year yield up, call it 2 basis points. And then you have Rivian shares. Quick look there, up over 20%. The company reported production for the fourth quarter that beat the average analyst estimate. Once again, the S&P 500 higher of 44 points, up 0.75% at 5912. The Dow Jones Industrial Average up 232 points, and the Nasdaq 100 up 195 points. That's a rise of 0.9%. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Alex.
All right, thanks so much, John Tucker. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance through our lens of our Bloomberg Intelligence folks. They cover 2,000 companies and 130 industries worldwide. We are counting down, I should point out, to Congress getting back into session. We have the House Speaker vote for Mike Johnson coming up in just a few hours' time. So we wanted to kind of break that down even more with Henrietta Trace, Managing Partner and Director of Economic Policy over at Veda Partners. All right, what's your best call on what happens today?
If I had to guess, I would say that Speaker Johnson does not make it on the first vote, but the second vote will be one that he can win. And the reality there is really the alternative doesn't exist. Neither Steve Scalise nor Jim Jordan are in a better position to secure the 218 votes that he needs. But I understand that every Democrat is going to be in the chamber today, so they're going to make them work for it. And I think it will go to the second ballot.
Is there some concession that Mr. Johnson will need to make to get the speakership?
You know, there's already been a number of concessions. The rules package that was released earlier this week has a lot of red meat for Republican lawmakers. There's going to be a series of votes on transgender youth in sports, on immigration, on abortion, things that the party really wants to hold early votes on. So those are early gives that he's given to the caucus. He, of course, is a very conservative member himself. But some of the tougher asks, like putting Chip Roy, a very problematic to leadership, to sort of any of the speakers that we've had in the past, putting him at the chair position of the Rules Committee is something that's been floated out there and something that he's seeking. That would make every piece of legislation that they try to pass for the next year or 2 years extraordinarily difficult. But that is a concession that is theoretically possible. I don't know that it'll come to that, but that's something that might be needed to get Chip Roy's vote.
For an investor, is today's vote important, or is it just going to be about the budget? Is it going to be about the first 90 days? What's going to be that focus?
You know, there's a lot of optimism in the market right now that the Trump agenda and whatever Trump says goes. And there's, been this mandate and all this legislation is going to be easy to pass. If you didn't learn the lesson last month when we saw the CR almost go down in flames when Trump tried to, at the last minute, insert the CR and lost 38 members of the House Republican Conference, you will see it again today. Donald Trump is coming in as a powerful leader of the MAGA contingent, but he does not run the House or the Senate. I think it's really interesting that a lot of the focus is on the House right now. Obviously, they're the ones that are going to have the tightest majorities and have to have the speaker vote. But there are a lot of senators who will not be marching to his orders. And one of the things that, any Senate or House staffer knows, as I certainly do, is that senators and House members know that they are very powerful as well, especially on the Senate side. And they are elected to, in the Senate, longer terms. They are unlimited, and Trump is term limited. So I think for investors, this vote today is not necessarily going to change policy. And it's not the same as the tax bill or the deficit increasing reconciliation vote or anything like that. But it is a very clear illustration that Trump is not all powerful, that House members do need 218 votes to pass legislation, and they have 53 seats in the Senate. It's going to be really, really hard next year. And I think that's something that the street needs to be aware of.
Red headline crossing the Bloomberg terminal right now. Nippon Steel plans to sue over blocked U.S. steel deal. That's according to Nikkei news service. So we'll keep up on the latest reporting there. Henrietta, I guess the speakership is kind of right in front of us right here. But after that, the Senate is going to get about the business of confirming some of these cabinet nominations. Are we going to have some fireworks there?
Yeah, I think for sure. I know that there are a number of concerns with Pete Hegseth, for example. There are going to be concerns with Tulsi Gabbard. I think that what we've seen senators do, and you should take a lot of indication from the candidates that they do choose to talk about. So whether that's Scott Bessent for Treasury, whether that's Jamison Greer at USTR, the folks that they are talking about and that senators will go on the record to discuss are folks that are going to be at Secretary of State level, Secretary of Treasury level, and those will go through with relative ease in late January. But I think that there's going to be a lot of trouble coming down the pike for members. And be mindful that you can only lose 3 senators. And we have 3 that I can rattle off immediately who are going to be just general thorns in the side of a far-right administration. Mm-hmm. And that would be Susan Collins of Maine, who's up for re-election next cycle, Tom Tillis of North Carolina, who's up for re-election next cycle, and Lisa Murkowski of Alaska, who has, a lot of positions that are more moderate than some of the far-right sort of true Trump supporters in the United States Senate. So immediately there are a 3-man contingent that is going to be a problem for any of these controversial members. And that's before you even get to the committee level, where you have, structural integrity problems with some of these candidates who are not mainstream at all. And we're going to run into specific problems.
We also got news yesterday that President-elect Trump filled out his Treasury team, including Assistant Secretary for Tax Policy, Ken Keyes. He served as the Chief of Staff of the Joint Committee of Taxation. We also have a senior counselor to the Secretary also in place, maybe Alexander Priete. I don't know if I'm saying that right. Priete? Anyway, what do you think of these guys? Like, do they move the needle? Like, did we learn stuff?
Yeah, absolutely. We learned stuff. And we saw that, probably in the last month as they've tried to fill these seats at Treasury, at the Council of Economic Advisors. The running theme through all of these men that have been announced for this position, from Kevin Hassett to Peter Navarro to Scott Bessent and more, is that they support tariffs. And there is not going to be a sort of strong, pro or anti-tariff sort of pro-free trade contingent in the Trump administration next year, the way there was in the first administration of the Trump team. I think that's probably the most important takeaway. If you were looking for a leveling offset to some of the more very pro-tariff ideologues, it doesn't exist. And so I think a focus on this year, I keep saying next year, but this year's tax bill and the need for revenue and the people who are going to be staffing these positions, they've written, entire working papers on why tariffs should replace income taxes or offset the cost of extending the $4.6 trillion tax cuts that were passed in 2017. So the number one takeaway for me is that there is not a bulwark against Trump's tariff policies and his tariff agenda. And that is, of course, something that he can implement at the administration level with these agencies, with USTR, with Commerce, with Treasury. They do not need Congress here. So for anyone who's expecting, a House Republican or House Senator to come in and say, hey, we're still the party of free trade, that is irrelevant. The president can impose tariffs under myriad sections of the trade law, whether it's 232, 301, IEPA, et cetera, without any say-so from Congress. And the folks that he's putting in to these very powerful economic positions support tariffs and that agenda.
All right, Henrietta, thanks a lot. Henrietta Trey's managing partner and director of economic policy at Beta Partners. We appreciate that. Coming up, we'll break down dock worker and port employees getting back together.
You're listening to Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, Alex Steele, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. John, from your perch up at the Highlands, you see a lot of commercial shipping come in to the Port of New York and New Jersey, right?
And a lot of it is still just parked way out there, waiting for the Sandy Hook pilots, as they're known. They come in, guides the ships through the local channels.
Right. Yep. I see that when I take the ferry home. I'll see those ships out there. It's pretty cool. Apparently, the dock workers union and some of the shippers, they're thinking about striking here on the East Coast. I don't know.
Again?
Didn't we just do that on the West Coast? Lee Klaskow, he's going to figure it out for us. Senior transport, logistics, and shipping analyst for Bloomberg Intelligence joins us. Lee, can you summarize what's happening from a labor perspective on these East Coast and Gulf Coast ports?
Yeah, sure. Hey, Paul. Happy New Year. So, what's going on is that last year, I forgot what year we're in already. Last year, the labor group, the International Longshoremen and the U.S. Ports along the East and Gulf Coast, they couldn't come to a conclusion really around automation. They went back and forth on pay. It seems like they're kind of in agreement on where pay should be. That could be up around 67% through the contract. So that's a nice pay increase for those workers. But the real sticking point has been around automation. And they were kind of forced to go back to the negotiating table by the Biden administration and trying to hammer out a deal. And so we're waiting for that deal to be hammered out. But obviously, the union does not want increased automation because they fear that it could mean fewer jobs. And while the port operators obviously want automation because it'll make them a lot more productive.
It does feel like the worker pay is one thing, but isn't the whole world going to automation anyway? So how do we avoid that?
I don't think it's about avoiding it. I think what the union would like to do is to slow that progress down as much as it possibly can. I think they're smart enough to realize that they can't get out. They can't be totally in the way of progress. But there are people that have jobs at the ports, and there has to be some sort of plan for how do we phase certain jobs out and increase other jobs that might be needed because of these new automation pieces of equipment, to maintain them and to operate them as well, because they're just not AI robots that just do everything by themselves. They have to be maintained.
So what's the time frame here? I mean, do we risk any stoppages or slowdown in freight here? How do you expect this to play out here? At some point, they got to resolve this.
So there's a January 20th deadline. So that's really what we're looking at. What we've been seeing for even before they went back to the negotiating tables, the shippers were rerouting some freight to other ports just to kind of hedge their bets in case there was a strike. And if you remember last year, there was like a 2 or 3 day strike, but the workers went back. And so they're continuing to do that. Shippers are, whether they're deciding maybe to go into a Canadian port or go into LA Long Beach, they are making alternative plans just to hedge against a possible strike. We're in the camp that we don't think that an elongated strike is going to happen. If it does happen, it's probably going to be like a couple of days, like we saw last time. And then the federal government will kind of step in and say, "Hey guys, get back to the negotiating table," because what you do is so important to the economy and to the health of the United States.
What companies are in the crosshairs of all of this?
A lot of the port operators are not U.S. public companies. We look at it from our coverage advantage from the truckers and the rails that support the ports. On the East Coast, that's Norfolk Southern and CSX. The Gulf is also Norfolk Southern, CSX. Some of the Western rails and Eastern and Canadian rails have some exposure to that area of the world also. Then you just have also intermodal players like JB Hunt or Hub Group will be impacted as well. Any sort of disruption can be good for some logistics providers like truck brokerage or freight forwarders, because when shippers are looking for alternatives, they're willing to pay a premium and they need somebody to sometimes hold their hand and help them. And that's when a freight forwarder or a truck broker might be able to help them out.
Lee, thanks so much for joining us. Lee Klaskow, Senior Transport, Logistics, and Shipping Analyst for Bloomberg Intelligence, joining us from Princeton. Again, U.S. Dock Workers Union and the employers and shippers resuming contract talks on January 7th to try to hammer out some of the final details of that deal. So we'll pay attention to that. And Lee Klaskow is the expert there. One of my first jobs on Wall Street was covering the railroad and trucking stocks. It was fun.
Oh, yes. This was when you had the office with the window that overlooked the railroad, yes?
No, that was a little bit later, but that was down in Richmond, Virginia.
Did you sign up to for the trucking experience?
Oh yeah, I trucked from Long Beach to Salt Lake overnight. It was awesome.
Wow.
Yeah.
What made that awesome?
Just because they offered it to us. We were a bunch of bankers out there in the port, and we were looking at the facility they had out there, and there's like 20 of us. And they said, "Hey, anybody want to take an overnight trucking ride and see what it's really like to be a trucker?" Out of 20 people, I was the only one that raised their hand. Yeah, every other banker says, "I'm flying back home." And so, so I flew to. So we went overnight, and we slept in the truck.
Did you put the cap on and pull the?
Oh, I definitely pulled the
horn. Are you kidding?
I definitely
did that.
And then we did a couple 3-hour sleeping break, and then we went to Salt Lake and flew home from Salt Lake.
Actually, I would do that one night. Yeah, I would definitely do that.
I wouldn't allow it.
Deke was
for your seat.
was my trucker. Deke, good
Deke,
guy.
He still remembers.
Yeah, good guy.
All right, you're looking at rally underway in the market. Another hour of Bloomberg Intelligence up next.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Friday, everybody. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We have a great hour lined up for you. We're going to take you right to D.C. The House is convening right now as we await for the speaker vote for Mike Johnson. Also, we'll talk about ETFs, flows, and inflows with Eric Balchunas of Bloomberg Intelligence. Plus, it's Friday, so it's Munis. We'll break that down with Danielle Morin, Bloomberg Municipal Finance Team Leader. Plus, the Surgeon General of the U.S. calling for cancer warnings on alcohol labels. We're going to discuss that, too. You're definitely seeing alcohol stocks like Molson Coors decline on that news. All right, let's get right now to Billy House, Bloomberg congressional reporter. Again, as I mentioned, the House is convening right now. Walk us through the TikTok, Billy, of what we can expect.
Well, as we speak, the old Congress for the last 2 years is gaveling out on the House chamber floor, and within an hour at noon, the new Congress will take the floor, and the first order of business will be to elect a new Speaker of the House or the same Speaker of the House, and that's what's the big question mark right now. Will Mike Johnson survive a Speaker vote?
And so what kind of concessions will need to be made to get him elected? What's the expectation?
There's been closed-door meetings for days, and including even last night and this morning with conservatives mostly, hardliners in the Republican conference who want Johnson to make various commitments. One of the ones that's been most talked about is to make Chip Roy, a Texas conservative, the chair of the House Rules Committee. There's no indication that Johnson would do that. That would basically let conservatives bottleneck legislation they don't like at committee level. But other structural process changes, promises not to deal so much with Democrats, even on must-pass legislation, all those negotiations have been going on. Whether he caves in and agrees to any of this is something we're waiting to see right now, if that will have an impact on this vote.
Is everyone expected to attend? Because how do you vote if you don't want to vote against Mike Johnson, but you want your presence to be counted? What was like the technicality with all that?
That's all great questions. Okay, so for the House right now is the Republican majority is very slim, 219 to 215. So a loss of just one vote would prevent him from getting a majority, more than one vote. He would, if he lost two votes from the Republicans, Hakeem Jeffries Judge Johnson would not have the majority. So here's the deal. Members can vote present, and that won't count toward the total. So Republicans could do a sort of protest vote. The problem with that is Democrats are going to vote in unison for Jeffries, and he's got 215 votes. If you take a lot of Republican votes off the table, they could play around and let Jeffries actually win the speakership vote. So that's likely not going to happen. Members can vote for other people, too, and so the scenarios are more likely that nobody could get a 50% plus one, and this could go to a second or third ballot. But Johnson's people think he can do it in the first ballot, and that's what we're waiting to see.
So should we be confident that we'll have some resolution today?
We shouldn't be confident at all.
Well, no.
That's a fair answer.
But Johnson and his people want us to believe he is confident. And the top House vote counter for Republicans, Tom Emmer, said he's confident, but he's been confident before on votes that have been important and have not passed. What we're going to have is a roll call vote, a dramatic one, by name, alphabetically, of all members in the House. They will announce a name of somebody they support or vote present. Or not answer. And so this will be a dramatic and lengthy roll call of 434 members. Remember, a seat is automatically vacant because Matt Gaetz from Florida has already resigned. So the whole process will play out in a name by name roll call vote. And basically, if you hear two people from the Republican side mention anybody but Johnson, that means he doesn't have a majority on this first go around.
So, Billy, is this like your Super Bowl right now? Like, are you super pumped?
It is. Well, it's a lot of fun to watch, but it's a guaranteed hour of action, if you want to call that action.
Okay. Hey.
C-SPAN. Maybe we'll check in the C-SPAN.
Tune into the C-SPAN. Okay, so 2 votes or 2 people on the Republican side that say anyone other than Mike Johnson's name. That's what we're looking for. Okay.
All right.
There we go. Great stuff, Billy. Appreciate it, Billy House, Bloomberg congressional reporter, joining us there. Thank you so much. All right, let's get some more market action here. Here is a business flash with John Tucker.
Yes, technology shares lifting the major stock averages in the S&P 500. Right now, you have all 11 of the major industry groups. They are higher, and interestingly enough, utilities, the best performing industry group, that's home to Vista Group, ticker symbol VST. It's up close to 7%. Also, Constellation Energy, those shares up over 3%. Now, if you listened to us earlier, you heard Alex explain why, because the Biden administration has loosened rules for a tax credit. It's worth billions of dollars for the production of hydrogen. With a recent pullback, Daniel Morris, chief market strategist at BNP Paribas, sees a buying opportunity out there.
Clearly, prices are lower than they were several weeks ago, and if those positive fundamentals are there, we think U.S. equities will recover. We're overweight U.S. equities in our multi-asset portfolio, so we do think that's one of the better places to be allocated right now.
Right now, the S&P 500, 45 points higher. That's up 0.8%, 59.13. The Dow Jones Industrial Average up 236 points. And the tech-heavy NASDAQ 100 up 206 points right now. That's up about 1%. NVIDIA, Tesla, Amazon, Microsoft, all among the leaders right now. This sounds like a commercial. I was kind of debating whether or not to do this. Apple offering a 3-day promotion. Free all-access Apple TV Plus Pass available for everybody this weekend. It's free on any device that supports Apple TV Plus. You want to watch, you have to sign in with your Apple ID. I'm always, I don't know, cringing.
But you have to give a credit card number and then cancel in 3 days?
That I don't know.
3?
But I'm glad you brought that up because, believe it or not, to get a ride the other day, I signed up for Uber.
Look at you coming.
Look at me.
Yeah,
but you know what? Then they started charging me $9.99 for something called Uber Plus. I didn't sign up for that.
No, you don't want Uber Plus.
So I tried to cancel it, and it was a real affair. But anyway, I'm sure there are people who share that same.
Well, yesterday on the train ride home to the Jersey Shore, a train fell down in Middletown, New Jersey. So that knocked me out.
It fell down.
Fell down and took out some wires, so that stopped the train service. So I got stranded in somewhere. Had to take an Uber for the rest of the ride home. So
from Middletown.
Yes.
That's far, right? No, it's
that's
not.
where I grew up.
Middletown, New Jersey.
My dad grew up in Middletown.
No kidding.
Yes, and then
all
I think
this
his
we're
parents
discovering just now
moved to Rumson. But we should have connected the dots because I went to the beach club that Tucker goes to when I was a kid.
Wow.
Anyway,
it's
just
amazing.
It's all interwoven at this point. Thank you, John Tucker. We appreciate that.
So few degrees of separation.
It is. It's totally that. It's totally that. All right, let's get some more movers here for you. Isabel Lee is joining us from Bloomberg News. All right, so what are you watching today?
I'm looking at Block. It's up 5%. We have Raymond James upgrading the stock to outperform.
Which stock is this?
Block, formerly Square.
Oh, that's right.
They now have a price target of $115. It's now hovering at around $90. So Raymond James said it's confident about Block's gross payments volume, or GPV. Right. Think of GPV as like a measure of the total amount of payments processed using Block's products. So the analysts see seller GPV growing into double digits. It did also say that Cash App is a bit of a wild card. So Cash App is the app for sending money between individuals and buying stocks or Bitcoin and comprises most of the company's revenue. But just last month, we have Bernstein lifting the price target to match a street high of $120. Goldman also lifted their price target last month. So it's looking like a good start for Block.
Yeah, it's up to over 30% last year, so a good run there. And again, you come up with, the company was initially named Square. So ticker symbol, if you're an investment banker, you think about this stuff, you come up with SQ, it writes itself.
Yeah, totally.
Then you change the name of your company
and
to
it
Block.
gets confusing. What else you got?
Constellation, it's down 1.6%. So Constellation Brands is a firm that offers beer, wine, spirits, and juices. And obviously today, it's not a surprise that it's sliding. We have the U.S. Surgeon General saying that alcoholic beverages should display warning labels indicating cancer risk. The advisory actually lists a ton of cancer risk and cites a lot of facts, like 100,000 cases of cancer and 20,000 cancer deaths are in the U.S. annually. So it kind of seems a little scary. And the U.S. alcoholic beverage company market is significant. It's around $321 billion. We have Bloomberg Intelligence saying that if they carry the recommendation, they may face some consumer backlash, but BI is skeptical that such a warning label mandate will be enacted in the near term. We have a new president coming into the picture, and we know that Donald Trump is very pro-business. So it remains to be seen whether that will happen. But of course,
drinking wine is good for you.
That's what they keep saying.
That's what the French say.
There's got to be something else going on.
A wine a day keeps the doctor away, they say.
Yeah,
but actually, that's true. But when I saw this, I was kind of, I mean, everyone knows that alcohol isn't good, you know, or everyone knows tobacco isn't good.
Everything in moderation, I guess,
fair.
it is the point. I just think there are just so many random occurrences of cancer, particularly those of younger ilk, that like that's I think where this is all coming from too. There's a great article in the Journal sort of detailing the different areas that could be a risk. Okay, ending on a positive note, maybe.
No. U.S. Steel ticker is X though, which is I'm sure
fun.
Twitter tried X tried to buy that, but now it's U.S. Steel still. The shares are falling as much as 8.4%. That's the most since December 10 intraday actually, but that, of course, comes after President Joe Biden blocked the $14 billion sale to Nippon Steel. And we have headlines coming in saying Nippon Steel plans to sue over the blocked U.S. deal. We have Japan Economy Minister saying that this is incomprehensible. And facts aside, this high-profile deal has been in the headlines since last year. And many are worrying that blocking the deal could increase the tension between U.S. and Japan. Japan is an ally of the U.S., and it could also chill foreign investments. It also raises a question about what will happen to U.S. Steel. I mean, will they have to restart the sale process? They could struggle to find buyers for the entire company. Many uncertainties, but one thing is a little bit sure, which is we should expect a lot of litigation. Companies have signaled that they may challenge the legal grounds of the block. But we also have Donald Trump pledging to block the transaction. So we're not seeing any changes there, even if the presidents will be changing in the White House.
All right, Isabel, thanks a lot. Appreciate it. Isabel Lee joining us, Bloomberg Equities reporter. Let's get more on that alcohol story here. So again, U.S. Surgeon General calling for cancer warnings on an alcohol label. Duncan Fox is Bloomberg Intelligence Senior Consumer Staples Analyst. We're clearly seeing alcohol stocks, Brown-Forman, Molson Coors, Constellation Brands get hit. What would be the real impact here if a label came on?
Well, if it came on, I'm assuming it would be quite similar to what happened in tobacco, where you just see volume come under a little bit of pressure in the short term. I mean, tobacco volume generally is down about sort of 3 to 4%. It's been a little bit worse in the US recently, but that I would assume that's the sort of thing that you would go to if it was done globally. At the moment, this seems to be something coming out of the US, and I'm assuming it will probably just stay in the US at this moment. But who knows? I have no idea how long it will take to get any regulation through.
Duncan, have the companies talked about this at all, or this risk highlighted it? What do the companies say about something like this?
I think they're as shocked as I was when I saw it hit the screen. I don't think anybody had any clue this was going to come from anywhere, frankly. I think I heard your previous person on the radio there, and they're saying we all know alcohol's bad for you. They've got all sorts of warnings already on there, but obviously not the one that would say cancer, which would certainly worry some people. So, they have drink responsibly on there and all those sort of things. So this one's come out of nowhere, and I think, to be fair, the industry's been trying to do sensible things for years, essentially trying to get us to drink better quality product and drink less of it. So, this one's a bit of a surprise.
It's also interesting because I wonder what the direct impact would be in terms of timelines. Like, I mean, clearly there was a world where women drank when they were pregnant, and then everyone figured out that wasn't good for them and that it would harm the fetus, and then therefore there was a warning label now on the alcohol bottle, which then prevented eventually women from not drinking mostly when they're pregnant. So what's like a time lag for stuff like this? Like if a label gets slapped on today, when do people start paying attention?
Well, The only thing I can talk about here is what happened on tobacco, and they started saying it was cancerous in 1956, I think, somewhere around then. And it was 1964 when the US Surgeon General put in saying it actually does cause cancer. Then it was 1966 before you actually got the label onto the tobacco packet. It was even later in Europe. It was about 1971 in the UK. I think it was 2016 in Europe. So it could take some time. Now, people stopped smoking, or certainly smoking incidence fell from about 50% in around about 1960 and has come down sort of consistently ever since. So I guess the talk of that would mean people would consider switching to soft drinks or to low alcohol stuff, although I'm assuming low alcohol stuff maybe have a similar block on it because it's got some alcohol in there. I couldn't tell you whether the amount, whether spirits are worse than beer or not. I have absolutely no idea. I've not seen the medical data on that.
Alcohol links to cancer have been known since the 1980s, according to Bloomberg's reporting. And the substance is ranked as the third leading preventable cause of the disease. So alcohol causes about 100,000 cases of cancer and 20,000 related deaths each year in the U.S. That's according to the Surgeon General. Far more than the 13,500 alcohol-related fatalities from traffic crashes, just to give you some numbers here. So we're seeing a little bit of a sell-off in the stocks here. Is this kind of in line with what you would expect? Because it doesn't seem like it's too traumatic to the stocks at this point.
Well, I mean, at the moment it's shock, I think, that's sending them down because we just don't know whether this will get carried on through the rest of the world. We have no idea when it will be put on or if it will be put on in the US. The data, I've no doubt the alcohol companies will say some of that data may be skewed because there can be other things that will be related. You know, if you have a bad diet, and obesity was number 2, I think, in the Surgeon General's list behind tobacco in terms of giving cancer. But I'm not hearing anything about them putting cancer on food packaging. So, I mean, I think there could be a long way to go before we see anything actually happen on the label. But you're right, the discussion's now in place, so people will start talking about it. I'm sure it'll get into newspapers and online, and it may affect people's consumption habits. I have absolutely no idea. I've got nothing to base it on at the moment, so I'm just sort of assuming that volume will probably come under a little bit of pressure. But my guess is for the companies, the beverage companies, will probably push prices up a little bit more, like tobacco companies have, and try and offset some of that hit.
Well, Duncan, we appreciate the insight. Thank you very much, Duncan Fox, Bloomberg Intelligence Senior Consumer Staples Analyst. As Paul was saying, everything in moderation. So sensible, Paul Sweeney. All right, coming up, we're going to talk more about the markets, in particular munis. It's Friday. Danielle Morin is a Bloomberg Municipal Finance Team Leader. She'll be joining us to talk about the muni bond market and what to expect for this year. Plus, Eric Balchunas, Senior ETF Analyst for Bloomberg Intelligence on ETFs. I heard that there was like a massive Bitcoin outflow in the ETF. But on the flip side, we had a massive rush into U.S. equity-focused ETFs over the last year. We'll break all that down for him. This is Bloomberg Intelligence. Happy Friday.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Well, the S&P 500 right now may be heading for its first gain since Christmas. You have NVIDIA and other tech shares helping drive the market higher. Rivian, take a look at this. Those shares right now up close to 23%. They say they delivered more than 14,000 vehicles during the last 3 months of 2024. That was more than analysts expected. There are signs of hope for manufacturing in the U.S. December's ISM Factory Index reaching the highest level since March, but it still remains shy of 50. That's kind of the dividing line, the benchmark for expansion. The ISM data showing factory orders rose to the highest since early 2024, while production also increased. Right now, the Dow Jones Industrial Average up 199 points, up 0.5%. The S&P 500 up 44 points. That's a rise of 0.75%. NASDAQ 100 right now 1% higher. A lawsuit from the state of Utah that was just made public says TikTok has long known that its popular video live streams encourage sexual content, including streams exploiting and grooming minors. As you look at yields right now, the 2-year is up a basis point, 4.25. We'll call that. The 10-year right now up a basis point. Yeah, that is at 4.57. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash.
All right, John Tucker, thank you so much. We appreciate that. Alex Steele and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube. So you can head over to youtube.com and search Bloomberg Podcast, and that's where you will find us. It is Friday. That means we talk municipal bonds. We do that with Danielle Morin, municipal finance reporter for Bloomberg News, joining us here in our studio. Danielle, how was performance in municipal bond market last year? Anybody make any money there?
Not a ton.
Okay.
Muni bonds broadly were up about 1% last year. A lot of that was because of a steep sell-off in December, followed global bond markets after the Fed dialed back some rate cut expectations, and munis sold off in tandem. So they lost about 1.5% in December, which led the overall year-to-date performance at around 1%, which is not great if you're a muni bond investor. It's not a loss, but it's pretty flat.
Yep.
So what do we expect for this year?
It really anything goes. It's all rate dependent. There's a lot of expectations and wild cards that could happen with a new administration. Munis are heavily dependent on tax policy, so depending what comes out of the Trump administration on whether taxes are lowered or raised, that always impacts the demand for munis. And then on the issuance side of the equation, we're expecting potentially another record year of bond sales, which also could pressure prices if they come as large as some people are expecting.
So how was 2024, just looking back, in terms of new issuance?
We had a record year. We had about $494 billion worth of bond sales. That's up about 37% compared to 2023. It was huge. And a lot of that came in what we like to refer to as mega deals, so deals above $1 billion. What's driving that is really the cost of construction is expensive now. Inflation caused construction prices to rise, which means that a bridge you could build for cheaper 5 years ago is much more expensive now, so the debt has to go up to account for that.
What kind of issuance do you think we're going to see now if the economy winds up holding up? Like, is it going to be sort of random project state specific, or what do you think?
So what states are dealing with, and local governments as well, is a roll-off in pandemic aid. So most municipal analysts are expecting issuance to increase this year as well. We could end up somewhere in the 500 billion mark again. And that's because without the cash that a lot of governments got due to the COVID relief funds, they will supplement some of those programs with bonding. And so infrastructure needs haven't gone down. There's still a tremendous amount of projects to be completed. So we're probably looking somewhere between 450 and 500 again.
I saw a story on the Bloomberg terminal about San Francisco, one of my favorite towns, may lose its AAA rating. I'm actually surprised it hasn't lost it to date because of some of the real post-pandemic problems that it's had with, people leaving the city and offices being much higher vacancy rate than across the country. What is the risk of San Francisco here?
Yeah, so San Francisco was downgraded by two different agencies at the tail end of last year. So S&P and Moody's reduced the rating from a AAA to one notch lower. Fitch put it on a negative outlook at the very end of last year, which indicates it could potentially lose its third AAA rating. That being said, San Francisco is a large city. It's dealing with a lot of pressures that a lot of cities around the country are dealing with. It is exasperated there because of some of the hybrid work from home in the tech industry that isn't as prevalent in other cities. But it is having persistent budget deficits, which is a concern for raters, and we are anxious to see what's going to happen. San Francisco is also selling about $500 million worth of debt later this month, so we'll see what the bond market reacts to this credit pressure.
When I keep reading a lot of stories about how schools are just not getting the same kind of funding that they used to, whether it's regular school or college or whatever, and they're thinking about closing or the funding stress. How does that dovetail in the muni market?
That's a great question, and we've seen a lot of education. We've seen a lot of education.
Oh, sorry. I did like a high five. We have a joke in the studio that whenever one of us gets a good question from a guest, we think we're cool. But no, go ahead.
I'm not supposed to have favorite sectors, but I love talking about education because everyone's so passionate about it. And you've seen a lot of change over it. Education during the pandemic. You saw people move out of cities, which caused some financial pressure for inner city school districts. Most public schools are paid on a per pupil basis. So when families move out, they lose students, and that impacts how much money they're getting from either the federal government or the state government in those cities. So that's one factor on the public education side. Colleges is a little bit of a different situation, but it is all enrollment driven. So there are fewer high schoolers at this moment. That's because of a drop-off in the birth rate during the Great Recession. Now those babies are going to college, and there's just fewer of them. So there's the same amount of schools and less students, which means enrollment is declining. And the schools that are feeling that pressure the most are small private liberal arts schools that tend to draw their enrollment base from a very specific area. So you're thinking these small schools in the middle of Pennsylvania that draw kids from one area that don't have a very diversified revenue stream. It's really fully tuition. You have less tuition paying students, you're going to get some more financial pressures.
Learn something every day. Danielle, thank you so much for joining us. Danielle Moran, she's a municipal finance reporter for Bloomberg News, proud graduate of Governor Livingston High School in New Jersey. Great marching band, by the way. That's kind of what we're there for. Excellent. All right, let's switch gears to this ETF scam, business. Eric Balchunas has been the expert for us on all things ETF. He and his team provide just outstanding research on the ETF business and the growth associated with ETFs. This is what surprised me, Eric. BlackRock's Bitcoin ETF posted record outflow after a banner year. Can you explain to us what happened there?
Yeah, look, ETFs, I've always said they're like hotels. The lobby is bustling, but there's plenty of people kind of upstairs doing their thing in the room. So the lobby, traders come in and out of the ETF. So you're going to see outflows from time to time, even in a very popular ETF. Even the great VU, the S&P 500 ETF from Vanguard, has outflows now and then. So there was a little pullback from 100,000 back to in the 90s, and I think that could have been what sparked some of the outflows. But the 300 million in outflows is 0.7% of the assets. So it's like a rounding error, no biggie. Yep. And, I think in general, look, over time, the Bitcoin ETFs, our phrase is 2 steps forward, 1 step back. And they had taken 3 or 4 steps forward, to be honest, over the past quarter. So they were due.
I'm taking a look at one of your notes, and this stat is amazing. Global ETF assets will likely hit $35 trillion in assets earlier than your previous 2035 expectation. That number is staggering. When do we hit that?
Hey, not bad for a scam, Paul.
I know. You're schooling me every day.
So, yeah, look, we had predicted 10% annualized growth for the next 10 years to get to 35 trillion by 2035. We thought, okay, 10% is, 5% of that would be, or half of that would be flows, and half would be the market, right? Stocks and bonds go up moderately. I don't think they do what they're going to do this year. But this year was so amazing, both the market being up and the flows. Every region broke record in flows by 20, 30% over the old record. So 32% in asset growth, that's a $3 or $4 trillion in 1 year, is unbelievable for an for an industry that's in its fourth decade. This is not a young industry anymore where 30% growth is that easy. So just the massive number. So our 35 trillion date is now scooted up to 2034. And the market's a big variable. I doubt we'll have a year like 2024 every year. We probably could have a down year or two. Who could think it, but it probably will happen. So I just think 10% a year is pretty modest, and I think we get there, but we could get there faster. We're trying to be pretty conservative here with this estimate.
This has been such an amazing trend over the last 10 to 15 years, Eric. This growth of the ETFs, just extraordinary here, and it offers such benefits for investors as you've explained to us over the years. We're also seeing mutual funds, which is what I grew up with. I guess changing their structure to ETFs. How easy is that? How hard is that? Are we going to see more of that?
Yeah, if you're a mutual fund, we call it the 3 C's. There's 3 ways to get the assets over to ETFs or to get involved with the ETF space. You can clone your mutual fund, like Bill Gross did with the PIMCO Total Return Fund. You can come over as a conversion, just straight move the mutual fund, and boom, the next day you're an ETF. There's been about $100 billion worth of that. The new thing coming is the 3rd C, classes. They're going to be able to just stick a ETF share class onto the mutual fund share classes. And when they do that, Vanguard's already done it. They had a patent, but their patent ran out. Now everybody else wants to do it. There's about 35, 40 issuers lined up waiting to do this. When they do that, it's going to create like a drain from the mutual fund into the ETF. And that's where we think that 35 trillion number, by the way, could get sped up also, is if you have the 20 trillion in mutual funds, if they now have this easy way to come over and transfer, and it would be a tax-free move, that would speed up that number because mutual fund people are trapped there because they don't want to realize the capital gains, but they'd rather be in an ETF. This will allow them to move without realizing those gains.
Before I let you go, Eric, what's going to be the cool new ETF this year?
Oh, easily the State Street Apollo Private Credit ETF. This is a big baby step because this would be the first true exposure to private credit. Apollo being involved is major. They promised to provide the backstop of liquidity. I do think it gets through the SEC. It's taken a little longer than it would otherwise, so they're definitely looking at it. But if that launches, it's going to be the first sort of opening from the ETF world to the privates world, which has 13 trillion. And if they can start to ETFize private assets, look out. So this would be like the first step in that process. That's the one I'm watching.
Wow, learn something new every day talking to Eric Balchunas. Eric, thanks so much for joining us. Hope you had fun with your mummers a couple of days ago. That's a Philadelphia thing. Eric Balchunas, Senior ETF Analyst for Bloomberg Intelligence. That would be interesting. Think about some of the 2 amazing growth areas in financial services over the last 10 to 15 years. One is ETFs. One is private credit.
My ears perked up with that.
I know, exactly right.
How does that work? Because the whole thing with ETFs is the balancing, right? How do you do that with private assets?
Let the smart people figure it out. And Eric will tell us how to do it. Eric will tell us what we need to know. We're going to have more coming up. S&P 500 up 1% this morning. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. You have technology giants. They're pushing the major stock averages higher today. NVIDIA, Tesla, Amazon, Microsoft, all among the leaders. Among some of the individual stock stories also, you have United States Steel. Those shares right now, U.S. Steel, the ticker symbol X, down 6.7%. This comes after the Biden administration blocked Nippon Steel's proposed purchase of the company. And, of course, Nippon, in the meantime, they are going to sue. Shares of the drink makers declining after the Surgeon General said labels on alcohol should carry warnings of their links to cancer. Right now, the S&P 500, 59 points higher. That's up 1%, 59.28 on the index. The Dow Jones Industrial Average up 248 points, and the tech-heavy NASDAQ 100 right now 286 points higher. That is up just about 1.4%. We just heard from Neil Dutta. I'll play this again because I think it's worth it. Neil Dutta at Renaissance Macro looking at higher interest rates. He says they may be keeping a lid on stocks.
One reason why they're going up is because, you know, at some level, the economy has been doing a little bit better, at least initially after the September meeting, somewhat better than expected. But I don't think that goes far enough to explain why interest rates have backed up. So I think that's part of the reason, but it's not really the bulk of the reason.
Commodities real quick. WTI crude extending a climb into a fifth day. Gold on track for its biggest weekly gain since November. I thought that was an important discussion that you guys had earlier with Neil Dutta because it does, according to him at least, raises the specter of perhaps policymakers losing the narrative on rates, losing control to some extent. So one of those fears going into 2025 trading sessions. We check the market's view all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Alex and Paul.
All right, John Tucker, thank you so much. We appreciate that. Alex Steele, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Over the last month, a lot of us that are in the business get the Wall Street research, and we get the strategists with their year-end forecast. As I was reading, I wonder how they do on average. And then I happened to read a note by Barry Ritholtz, and he basically says, not very well. And it goes back to his saying, nobody knows anything. And looking back at the year-end 2023 and the forecast for 2024, the average on Wall Street strategist was looking for S&P 500 about 4,800. Well, on Christmas Eve, we were at 6,000, so nobody hit it. They were way low, missed it badly. That's not too good, but maybe that's just the way it is. Barry Ritholtz joins us here, founder of Ritholtz Wealth Management and host of Masters in Business. Barry, nobody knows anything. You've been saying that for a long time. So what are we doing here?
So a couple of things. First, you have to just start with the initial premise. Why do we make these predictions in the first place? You know, by the way, the phrase comes from screenwriter William Goldman, who explained in his autobiography, Adventures in the Screen Trade, all the big Hollywood execs passed on Star Wars. They all passed on Raiders of the Lost Ark. They passed on E.T. Like, you go down the list of like terrible guesses about the future, and it's genuinely shocking, especially people who are supposed to be experts. So when we look out 12 months, what's likely to happen? And I think a lot of where the strategists go awry is they take the average and say, well, an average year is 8% with dividends reinvested. Let's go a little up or a little down. The problem is we almost never get the average, and the reason for that is that we're either positive or negative, and if we're positive or negative, we're nowhere near that plus 8%. The negative years average for the past century about minus 13%. The positive years, shockingly, average about 20%. And so if you're not guessing positive or negative, but just looking at the average, those extremes just don't come into play. You really have to dive into the data and do a two-step process, but nobody wants to make that guess, hey, we're negative next year, so I'm going to be at minus 13%. Strategists just aren't built that way.
So what do you think is going to happen then? So, I mean, that makes a fair case, but we do need some kind of crystal ball in order to know where to go, what to do, where to put your money. How do you do it?
Well, first, you shouldn't be thinking in terms, especially if you're not a professional trader that is getting judged quarterly or monthly or even weekly. But if you're an investor thinking about retirement or generational wealth transfer, or you're just saving, you should be thinking in terms of years or decades. I sometimes feel like that's a cheat. I sometimes feel that it's too easy to say that because we know what the long-term trend is of the market. But I think you have to assume, hey, no one has shown any skill at guessing the twists and turns of the markets over a short period of time. And the reason for that is simply the world is too random, right? How many people had on their bingo card in the fourth quarter of 2019, by the way, global pandemic is going to shut the world down and the market is going to do great after that initial stumble?
So true.
Or how many people had the Russian invasion of Ukraine or, Gaza and Israel? Randomness is everywhere, and we kind of forget about that. And so, there's an old Yiddish expression, man plans and God laughs. And it's really very true. It's also, if Miller was here, he would mention that it's also a Public Enemy album title. But it's just the reality is the world is so random, and 12 months is simultaneously a really short period of time in terms of what the market's going to do, but a really long period of time for a random event to just derail our best laid plans.
Hey, Barry, we were just talking to Eric Balchunas of Bloomberg Intelligence about ETFs, and he was talking to us about in 2025, he thinks there may be an ETF, Vanguard and Apollo, focusing on the private credit business, which would be really interesting. How do you guys at Ritholtz Wealth Management think about alternative investments, whether it's private equity, private credit, hedge funds, that kind of thing?
So a couple of ways. First, there's something to be said that some alternatives do provide some degree of diversification. Hedge funds and venture capital tend to track what the stock market does for the most part, and there are dozens of different types of hedge funds. So if you're doing, activist or risk arb, well, then that's probably going to be not very correlated. But the appeal of private equity or private debt is that you're not tied to the market cycle all that much. Perhaps you're tied to the economic cycle and what's going on with interest rates, inflation, and the Fed. But overall, you're looking at businesses, you're typically fairly well reserved and secured against downturns. They're very favorable terms for the lender or for the investor and the private equity investor. So that's the good news. The bad news is typically you're locking up your money for extended periods of time, 5, 7, even 10 years. And, the best deals tend to go to the biggest, best firms. And typically, it's $500 million to participate. So mom and pop tend not to have that. So when we look down the quality scale, hey, if you can get into a top 2 decile firm, you're probably okay. As you work your way down the list, as they become more and more public, there is not an infinite number of great private deals, and you have lots and lots of smart bankers chasing deals. At a certain point, the risk-reward ratio begins to change, certainly in the bottom half of those deals. I'm always a little skeptical about this. People didn't realize what a great private investor Groucho Marx was. He famously said, I don't want to participate in any fund that was deemed to have me as a member. He was talking about clubs, but it's the same thing. If you could get into an alternative that's top decile, hey, no, top quartile, knock yourself out. But you have to really be very circumspect and selective about everybody else.
Hey, Barry, we appreciate you. Thank you very much. Nice haircut. Barry Ritholtz joining us there. Master in Business Podcast. Definitely check that out. You can get all this great insight anytime you want it. All right, coming up, Matthew Schettenhelm, Bloomberg Intelligence Media Litigation Analyst, will join us for the latest on TikTok. All I know is that the lawyers win. That's all I got. That's all I got for you.
That's a good one.
This is Bloomberg Intelligence.
listening to Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Friday, everybody. It is Alex Steele and Paul Sweeney. It is Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance through our lens of our Bloomberg Intelligence folks. They cover 2,000 companies in 130 industries all around the world. So the fight over TikTok, as I mentioned before the break, the lawyers win. That's a sure thing. But what else? Matthew Schettenhelm is media litigation analyst for Bloomberg Intelligence. He joins us from Washington, D.C. Okay, where are we in all of this? What's the TikTok for the next 3 weeks?
Yeah, Alex. So we are 1 week away from a major showdown at the U.S. Supreme Court. By 10 a.m. next Friday, the Supreme Court will be taking up the question of whether TikTok can avoid a U.S. ban that would take effect 9 days later, January 19th, unless TikTok can convince 5 justices of the U.S. Supreme Court to stop it.
What are the odds of that happening here based upon your analysis?
Yeah, so my thought is that the best way to evaluate how strong TikTok's chances are here is to look at how the D.C. Circuit handled it in December. That was a 3-judge panel that looks very ideologically similar to the U.S. Supreme Court. 2 Republican-appointed judges, 1 Democrat-appointed judge, and the 3 of them unanimously and really without any hesitation ruled against TikTok and said, look, we don't see much of a First Amendment case here. And the standard to stop a deadline that Congress set, it's pretty high. It's not something that judges do lightly unless they see a really compelling case that, hey, you're likely to win here. I'm not sure 5 justices are likely to see that.
What do we think that policy is going to really dent the souls here of social media, or is this going to be a TikTok-specific issue?
I really think this is a very TikTok-specific issue. This is all about TikTok's ownership by ByteDance, which has headquarters located in China, and that presents the issue. It creates, an enormous opportunity for TikTok's competitors in the U.S. If this ban goes ahead, as I said, on January 19th. We're talking about knocking out the leading social media platform in the United States within this month. And so it creates a real opportunity for Meta, for Google, for Snap. Those companies don't have these ownership problems that TikTok has. They'll still face threats of regulation on different fronts, but this is a very TikTok-specific issue.
All right, so how do the mechanics work next Friday? Give us kind of the timeline when we'll get some resolution here.
It's a great question, because this is a very novel setup in terms of there isn't a lot of precedent for the timing here for the court to take argument this quickly on a stay issue. So what's going to happen is there will be an argument for an hour or two, 10 a.m. next Friday morning. The justices are set to meet in conference that day as well. It wouldn't surprise me at all is after that conference, the justices put out a short order saying whether they're going to delay this January 19th deadline or not, whether they're going to grant that stay. That decision could come as early as next Friday afternoon. It could also go into the next week. After that, then that buys the justices.
Oh, looks like we actually just lost Matthew there.
Hey, we lost that.
That's a bummer. All right, anyway. Matthew Schettenhelm, Bloomberg Intelligence Media Litigation Analyst. Oh, is he back? He's back.
Okay, so Friday afternoon, we might hear something. And what happens if we do hear something one way or the other?
Yeah, hey, Joe, Capitol Hill is absolutely...
Nope, he's not back.
Right,
anyway,
we'll go.
We're going to go. Thank you, Matt. We appreciate it.
I'm not a TikToker, so I don't know. But I know, like, billions of people are, apparently.
Right. But here's my question about the social media. So I appreciate that if there were issues that get TikTok, that could be good for, like, Instagram, which would be good for Meta, et cetera. But there's just so much negativity with social media players, too, and restrictions that are coming in from different countries on their social media. Does that eventually come and hit us? And what does that mean then for those companies?
Yep. It's interesting. There's a lot of legal issues that have protected these internet platforms. They're saying, hey, we're not putting this hateful content on there. It's user-generated content, and that's generally been their defense. And now the question is, do you want to put that whole thing into play? That's a whole different argument as well.
Yes. Versus the ownership of actual TikTok.
Yeah, as Matt Schettenhelm mentioned, this is primarily about the ownership of TikTok by ByteDance, a Chinese company, and that presents the national security issue. So that is the issue that the legislation, bipartisan legislation, as we've been told, that said, hey, you either got to divest this thing or we're shutting it down. Now, would the Supreme Court overrule, change, stay an act of Congress? I don't know. And what we've heard from Matt Schettenhelm in the past is unlikely, but, we'll hear the case. I guess that's kind of where we are.
I guess it's a pretty juicy First Amendment conversation at the end of the day, right?
Yeah, absolutely. And so we'll see. But again, I guess the good news is we're going to know something as soon as next Friday.
You say that. You're always so optimistic, okay, but getting anything definitive from D.C. But you're probably right.
Yeah,
you're probably right.
This is the courts, so hopefully...
that will actually make a difference. Let's take a look at the market here because, man, we're seeing a pretty solid rally. The Nasdaq up by 1.4%. The S&P is up about 1% as well. And I'm just checking on small caps. So small caps are also up here by a 1%. So it's not just tech. Yes, tech is outperforming, but today is not just tech. It is definitely a widening of the rally that we see It feels, though, that next week we're going to get everybody back in the office. Plus, we're pushing ahead to Jobs Friday, which could definitely be a catalyst. We had Thomas Barkin of the Fed talking about how he thinks for the employment picture, we're going to see less hiring, not firing. That's quite interesting when it comes to that jobs number on Friday.
Yeah, solid. I just got to note the JP Morgan Healthcare Conference, January 13th and 14th. That is huge in the healthcare business.
Oh my gosh, huge.
So yeah, be on the lookout for some news coming up there.
Well, have a great weekend.
You too.
It was a good 2-day work week for me.
Yes, it was.
This is Bloomberg.
By the electorate, they are expecting us to get to work, and we don't have time for drama.
He can only afford one Republican defection. CBS's Torian Small is on Capitol Hill.
It's unclear if Johnson will have the support of the conference at large after the first round, so he'll have to decide if he wants to stay in it. Though he does have the support and backing of the incoming president, the full-throated endorsement of Donald Trump.
Some Republicans weren't pleased when Johnson helped pass a short-term spending bill to keep the government open. Law enforcement officials are worried about copycat attacks after the New Year's Day truck attack that killed 14 people in New Orleans. Correspondent Cammie McCormick.
The FBI and other agencies issued an intelligence bulletin overnight that warns of copycat or retaliatory attacks. The bulletin warns law enforcement to be aware that attackers often have secondary weapons and may continue to threaten after the vehicle has stopped. Some of the possible indicators involving rental vehicles include fake IDs and reports of rental vehicles parked for prolonged periods of time near sensitive sites.
The White House says President Biden and the First Lady will travel to New Orleans Monday to meet with local officials and families of the victims. Shares of companies behind brands like Jack Daniels and Corona Beer are falling after Surgeon General Vivek Murthy issued a call for cancer risk warnings on alcoholic beverages today. Dr. Murthy's advisory notes alcohol consumption is the third leading preventable cause of cancer in the U.S. Apple has agreed to pay $95 million to settle a civil suit accusing the company's virtual assistant, Siri, of spying. CBS's Chanel Call.
The 5-year-old lawsuit claims that Apple activated Siri to record users' conversations even when they did not use the trigger phrase, "Hey Siri," and that some of the conversations were shared with advertisers. Apple has not admitted any wrongdoing in the settlement, which still is to be approved by a judge.
The Transportation Department's issued its first penalty against an airline for keeping passengers waiting. Correspondent Jim Krasula has the details.
The federal agency has fined JetBlue Airlines $2 million for chronic flight delays. The DOT says JetBlue has used an unrealistic flight schedule that affected passengers and reduced airline competition.
Dow's up to 50, S&P ahead 60. This is CBS News.
diameter and weighed more than 1,100 pounds. Pieces like that are usually designed to burn up in the atmosphere. It made such a loud noise, residents of the village thought a bomb had gone off. They say it glowed red as it fell from the sky. It flattened some trees and bushes. One resident says people there are now afraid to sleep. Michael Wallace, CBS News.
The Hollywood Awards season kicks off Sunday with the 82nd Golden Globes on CBS. Netflix Emilia Perez goes into the Golden Globes as the most nominated film. It's up for 10 awards, including Best Comedy or Musical, but Wicked could triumph. The Brutalist is a critical favorite for Best Drama.
Tell me, why is an accomplished foreign architect shoveling coal here in Philadelphia?
Deborah Rodriguez, CBS.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
The new Congress is called to order. Welcome to the fastest show in politics, with the new session set to begin today, but only after a speaker is elected. And that is where we start the Friday edition of Balance of Power. It's good to have you on Bloomberg TV and radio. I'm Joe Matthew in Washington. Coming up, we're going to bring you into the House of Representatives as the new session begins here. We'll witness the speakers vote together, no matter how many rounds it takes. And we'll have insights from Democratic strategist Brad Howard at Corcoran Street Group, of course, a veteran of the House and an expert on procedure, with analysis from our signature panel. They're both with us on this important day in Washington. Jeannie Shanzano and Rick Davis will be with us for the duration as well. And we do want to start with you on the floor of the House of Representatives, where things are coming together right now. This is a great day in Washington, and I know that we're going to talk a lot about the strife surrounding this speaker's vote today. But what we're about to witness here is a wonderful exercise that happens at the start of every Congress, with members taking their family members with them, witnessing the swearing in, and of course, a bit of history here, regardless of your politics. It's a patriotic moment. If you're with us on YouTube right now, welcome. We're showing you live pictures from the House, and we're going to keep you in the room here, in the chamber, for this historic event that's about to unfold before our eyes here. Is it going to be 1 round, 3 rounds, 15 rounds? That's the question when it comes to Mike Johnson, the Speaker of the House. Again, having just ended the 118th Congress, it's a clean slate now, and we know that there is at least one vote against him in the Republican conference, but everything else remains a question right now, and that's where we start our conversation with Bloomberg's Tyler Kendall, who brings us live now to Capitol Hill. Tyler, it's time to go. Happy new session of Congress. What can you tell us?
Yeah, happy new session of Congress, Joe. It is absolutely packed here on Capitol Hill. After 12 p.m., that means the 119th Congress has officially gavelled in. They're soon going to try to establish a quorum. That will tell us how many members are voting today in the House Speaker vote. That's going to be absolutely critical as we try to do the math to figure out how many votes Mike Johnson needs to clinch that majority. After that, we'll then get into the nominating speeches for Speaker. Remember, anybody can nominate anyone on the House floor. We are expecting Congresswoman Lisa McClain, a Michigan Republican, to ultimately nominate House Speaker Mike Johnson in the first round of voting. And then after that, we're off to the races. But this is by no means a done deal for House Speaker Mike Johnson. As you know, he's been strategizing with President-elect Donald Trump, who threw his weight behind his bid and even personally offered to call any Republican holdouts if that meant the difference to get them over the finish line. But we're going to have to wait and see what's happening here. I was down staking out House Speaker Mike Johnson's office in the rotunda earlier, and he didn't say much, but he did say that he's not striking any deals, saying that there will be no quid pro quo. Whether or not that lasts remains to be seen, because one thing is for sure, Joe, party leadership definitely wants to get this done as soon as possible. As you know, we're counting down the days to January 6th on Monday, when Congress is expected to count and certify the 2024 Electoral College votes. And we're told that party leaders, particularly President-elect Trump, would like to see that go off without a hitch.
Fascinating. Tyler, on any other day, and you're going to stay with us here as we figure out the next stages in these speaker elections. Tyler, on any other day, our lead story likely would have been from the White House, as we learned today officially that President Biden is blocking the $14 billion sale of U.S. steel to Nippon Steel. What do we know about this? Is it over?
this is something that we have been covering for months. Ends up basically a years-long saga ahead of a January 7th date that President Biden had to decide what he was going to do with this deal. But it didn't necessarily come as a surprise here in Washington, right? This had become a flashpoint on the 2024 campaign trail with first President Biden and then Vice President Kamala Harris and then President-elect Trump all coming out saying that they would block this deal. Now, in his statement this morning, President Biden really honed in on this idea that he's trying to protect U.S. steel workers. We know that Nippon Steel had tried to assuage concerns that this was going to hurt factory workers and also U.S. steel production, but ultimately it wasn't enough as he blocks this deal. Important to note, though, that this was largely on the campaign trail a way to try to court the labor and union vote. We're going to have to see where it goes from for here because many of those workers are going to be wondering what happens to their jobs next.
Fascinating. Tyler, thank you so much. Tyler Kendall in for a long day in the House of Representatives, reporting for Bloomberg. We'll get back to Tyler a little bit later on as we get to actual voting. Right now, it's a bit of milling around as everybody gets in the chamber here at the start of a big day. And if you want to know and understand what's happening inside the House of Representatives, there is no better voice, and you know this if you hear this program, than our friend Brad Howard, the founder of Corcoran Street Group, who is an expert on procedure and the rules following his tenure as a chief of staff for Stephanie Murphy in the House of Representatives. Democratic strategist, Corcoran Street Group founder Brad Howard. It's great to see you, Brad. This, as you can explain to us, is actually a wonderful exercise. The first day of any new Congress should be one of optimism, yet we're going to see maybe some complications today. What's on your radar?
Yeah, well, first of all, happy swearing-in day to all who celebrate. It's a great day for democracy. Just so your listeners understand what's happening today is every single bill that was introduced in the last Congress is now dead. Everything resets, all the bills. You have to, if you want another bill, you got to file it. Everything resets. In fact, even the speakership resets. We don't have a speaker right now, and that's because the clerk is in charge of presiding over the House until a quorum is determined, and you need a majority of 435, so you need 218 to have a quorum. And then from there, you can move on to elect the speaker. The speaker does not have to be a current member of the House of Representatives. The Constitution is actually very vague on what the speaker requirements for the speaker are. So it's up to the chamber to elect their leader. The speaker is a unique role in the House of Representatives. It's supposed to be the representative of the chamber, not necessarily a representative of the majority party. And even though it's a partisan position, it is the head of the chamber, much like the vice president is head of the chamber in the Senate. And so we've got, it's a nail biter for Speaker Mike Johnson. You've got such a slim majority, and you've got a rancorous Republican conference that is frankly split along in many different ways, ideologically and philosophically. And so he's got a tough, this is not the toughest day of his speakership should he win. The toughest days are the ones ahead.
Isn't that the truth? As we look at live images from the House floor right now, Brad, the speaker, or I guess the speaker in waiting, Mike Johnson, is on the floor. Hakeem Jeffries, a lot of hugging, a lot of handshaking as people get back together following the holidays, of course. And I'm also looking at an interesting conversation between Andy Ogles and some other members of the Freedom Caucus today, including Tim Burchett. Brad, these are the guys we're watching. How much trouble will the Freedom Caucus give Mike Johnson, or dare they cross Donald Trump?
Yeah, first of all, what your viewers are seeing on the floor is unique perspective because right now there are no House rules. House rules actually prohibit the C-SPAN cameras from various angles along the floor because they don't constantly want to be seeing and overhearing the private conversations of members. So what if you can see this on TV at the moment, right now, there are no restrictions on what kind of camera angles they can pursue. So swearing in day, you're getting a unique perspective when you watch the ceremony. Secondly, you're going to see a lot of families on the floor, a lot of new members that are sworn in for the first time or bring their kids. When I worked for Congresswoman Stephanie Murphy, she brought her little boy and little girl, and her little boy was waving the flag that she waved when she became a citizen as a teenager. So there's some pretty special moments you're seeing on the floor right now. But in terms of the Freedom Caucus, you used to have a caucus to cause some trouble for the speaker. But because the majority is so slim, the bigger concern for Speaker Johnson is not necessarily the Freedom Caucus, it is individual members. All it takes is 2 to 4 rogue Republicans, and they can make Johnson's life very, very difficult. And so, of course, the Freedom Caucus is aligned pretty closely with Donald Trump. It is, for all intents and purposes, they've rebranded themselves the MAGA caucus because that's their new philosophy. But the moderate Republicans hold just as much weight in a tight margin like this. So Speaker Johnson, especially when it comes to issues like the debt ceiling, when it comes to issues like appropriating funding so the government can stay open, he's going to have to please a very broad ideological Republican conference at the moment.
Brad, to your point, I'm just having a blast looking at these images from the House floor because we can kind of look at whatever we want at the moment. Chip Roy's hanging out. You've got some interesting groups gathering together here. And I want to just kind of balance both of these storylines with you because it's really important what you point out. We're obsessing over procedure and, you know, who's going to survive the reality show today. But the fact is there are some wonderful things happening here. The children who are on the floor will remember witnessing the swearing in of their parent or their family member for the rest of their lives. Those lawmakers have parents in many cases who came to this country from other places, and to watch this moment for their families on a personal level is an incredibly important thing. This is the stuff, Brad, that people tend to not talk about outside Washington, isn't it?
Yeah, I mean, it's a pretty special moment, and there's a lot of history in that chamber as well. You know, we've had, you know, a lot of former presidents be experiencing what's going on today and, you know, showing up on the floor on swearing-in day and raising your right hand and taking an oath to preserve, protect, and defend the Constitution of the United States. And so, you know, there's a pretty special moment right now. And like, as you said earlier, it's full of optimism. I think a lot of members are coming into this hoping to make a difference for the people that sent them there. You know, at the end of the day, these are the people's representatives. It is, you know, the Constitution set this chamber up to be the closest to the people and to be closest to the passions of the people. And, you know, I think it really, truly is a shining example of representative democracy. But, you know, keep in mind, first and foremost, each individual's responsibility is to their district, not to their political party. And I think sometimes too often we've got too many folks that forget that. We are not a parliamentary system like in Britain, though we're getting closer to looking like one. But at the moment, their job is to represent the 700 to 900,000 people they represent in their congressional districts. And, you know, not to mention today, they're also opening offices in their districts. So all across America, you're getting keys turned to open the offices to district offices where they have an equal number of district staff. They're going to take care of, you know, veterans who are having trouble with the VA, or seniors who need help with their Social Security, or families who need help with passports. You know, there's half of this job that's out of Washington that a lot of these folks are going to return, go back home to, and get to work there as well.
See, this is exactly why we wanted to have Brad today, as we look at some animated conversations on the floor. I've only got a minute left, Brad, so let's get to the matter at hand. Third round, 15th round. How does this end for Mike Johnson? Does he have the gavel?
You know, I'm hearing, yeah, no, I'm hearing rumors that he may not get it on the first round, but you know that there may be some wrangling that goes on to the second or third round. I don't anticipate this going as long as it did for Speaker McCarthy. You know, because I think the rules package that they negotiated was negotiated ahead of time. Now, I think Democrats would argue this rules package is among the most partisan we have seen since Newt Gingrich. You know, they really, you know, have removed a lot of powers that the minority that the Democrats kept when they were in the majority. And so we're starting to see Johnson, you know, really kind of crank down and make the rules package a little more partisan. So I wouldn't expect a single Democrat to vote for the rules package. And that's the first thing they have to do once they elect a speaker. The speaker will go up, give a speech, and then they'll move right into a debate on the rules package. And that rules package will guide how the Congress operates for the next 2 years.
All right, he set the table for us. The great Brad Howard, Corcoran Street Group. Brad, thank you. Happy swearing-in day. We'll have a lot more ahead right here on Balance of Power on Bloomberg. Stay with us.
everyone on Wall Street. We do check markets all day long here at Bloomberg. We have got stocks pushing higher on this Friday. Investors finally able to buy the dip with the S&P up 55 right now. That is a gain of 1%. The Dow up 244 now, higher by 0.6%. The Nasdaq is up 253 points for the Nasdaq Composite Index, a gain right now of just about 1.3%. As we wrap up a volatile week, we've got the 10-year at 4.56% with a 2-year at 4.24%. Gold retreating by $16 the ounce, down 0.6%. 26.41 West Texas Intermediate crude oil up 1.4%. 74.13 a barrel on WTI, and Bitcoin now closing in on 98,000. It is up now by 0.9%. The U.S. Surgeon General says alcohol products like beer and wine should carry warnings of their links to cancer, citing an increased risk of developing tumors in the breast and other parts of the body. We've got spirits and beer companies selling off today. Anheuser-Busch, the ADRs down now by 2.3%. ADRs of Diageo trading lower by 3.4%. Not a household word, but its brands certainly are. Johnny Walker, Smirnoff, Pimm's, and also Constellation Brands trading at a 52-week low. Its products include Corona and Modelo beers. Again, recapping here, the Dow, the S&P, NASDAQ, all advancing. S&P right now up by 1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. Balance of Power continues. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie Pellet, thank you, sir. Happy Friday, and welcome indeed to the Friday edition of Balance of Power. You made it to the threshold of the weekend, and we've got a lot to learn between now and when we call this a day. It's the new Congress. Welcome to Swearing-In Day here in Washington. It's a big deal around here, as a matter of fact. Lawmakers, and in many cases, their family members, gathering in the chamber, the House of Representatives, where we're bringing you live views here as lawmakers gather, catch up after the holidays, and prepare to vote on a new speaker. By the way, where's Matt Gaetz? The only question I have beyond how many rounds for Mike Johnson is what happened to the gentleman from Florida? I thought he had a show to promote. We just got quite the tweet from Mike Johnson. I'm going to read it to you. It's a love letter to the Freedom Caucus. And he's been making the rounds here, of course, with Donald Trump at his side, lobbying to make him the next Speaker of the House. If you're with us on YouTube, you can look at him right now. He's hugging and shaking hands, saying hi to everybody again, hoping we get this on the first round. He talked about it on Fox Business last evening. Here he is.
We have to stay unified. We'll have maybe one no vote, I think. I think we get it done on the first round. Certainly hopeful for that because, as we noted, we've got to stick together. I think everybody understands clearly the mandate that we have, the importance of the moment, and I think they're going to come and get along. Look, I'm a proven fighter. I'm a MAGA conservative, but I'm also someone who can get everyone in that broad array that we have in the House GOP to work together.
He's even got Marjorie Taylor Greene behind him. Anything can happen, as we see on X from, do we call him the former speaker for the next hour or so? He says, as speaker, I commit to, we're going to talk to Wendy about this in a second here, right? Create a working group. He's got these numbered. It's a long tweet. Create a working group comprised of independent experts, not corrupted by lobbyists, to work with the DOJ. 2, task that working group with reviewing existing audits of federal agencies and entities created by Congress. 3, request House committees undertake aggressive authorizations and appropriations reviews. He also says they will hold agencies and individuals accountable that have weaponized government against the American people. Then goes on to write about restoring fiscal responsibility. Wendy Benjaminson can tell you exactly who this letter is addressed to. Of course, reporting and editing for Bloomberg here in our political coverage in Washington. Happy Swearing-In Day. This is fun, right?
Swearing-In Day.
Does that close the deal? Should it have said, Dear Chip Roy?
Yeah, it probably should have. And it's exactly what you described. It is a letter to the people who are not that excited about voting for him, who may want to let it go 1 or 2 or even 3 rounds just to get their pound of flesh and to see what happens. I mean, we still have Thomas Massey of Kentucky, who is willing to have...
That's a hard no, right?
That's a hard no. What did he say last night? He wants bamboo shoots put under his fingernails before he would vote for Mike Johnson for Speaker. Then. And even then he wouldn't. So, yeah, he's a hard no. So, yes, Chip Roy is the only other one. And there have been a couple of, I think Nancy Mace even said yesterday, I have to see before I vote. She's going to vote.
Are they angling for something, or they want a different speaker?
They're angling for what you just read. They're angling for a MAGA loyal, uncompromising Speaker of the House.
And
they
connect the dots to Doge,
right?
Apparently,
exactly.
So it's Speaker Musk.
I mean, that was written very much for Donald Trump. It was written to the Freedom Caucus for Donald Trump.
Remembering Elon Musk also endorsed the Speaker, even if
that's
tacitly.
Right. Yeah.
So this is a letter to Elon too.
Yes, it is. It's to say, look, Donald, Elon, we got you. Don't worry. I will bring you the House that you want. That should calm down the ultra conservative people who were wondering if Johnson, because he has now twice compromised for Democrats to get Democrats on board, and that's a career ender in this Congress. And also his talk about how appropriations will be so transparent and all that. It all sounds really great. I, unfortunately, am old enough to remember when appropriations is what got stuff done in Congress, right? You gave a guy from your state some money for a highway, or you got this one state for farm subsidies or whatever.
Grease the gears.
And you grease the gears and things got done. It may not have been the right way to do it, but this sort of sets up another my way or the highway kind of Congress.
Wow.
They are only going to do the things that the Republicans can agree to with their very narrow majority, which means they can never lose a single vote.
Well, and boy, he can't lose more than one here.
No.
Pretty tense meeting, I guess, in the Speaker's office last evening as he was hearing the demands that came back to repeatedly from members of the Freedom Caucus. Make Chip Roy the rules chair.
Right.
Is there any world in which that happens?
If it will buy Chip Roy's vote today in the first round, it probably could. And remember, the Rules Committee sounds really boring, but that is the committee that decides what legislation makes it to the floor of the House for a vote. So that gives Chip Roy tremendous power over the legislative agenda and what will get done. Will it be the tax cuts? Will it be the border bill? What will be the next big thing that the Trump administration wants to get done? So Chip Roy could be in the catbird seat for that.
Incredible. Would have a massive influence on the workings of the House.
By my vote with that job.
Well, there you go. So maybe this is the kind of thing that's about to happen. Pretty amazing to consider. We talked to Sarah Chamberlain, who's coming from the center here in the conference, right? She's in charge of the Main Street Partnership, the Republican Main Street Partnership. She's pro Mike Johnson. She wants to see this get done, as her roughly 99 members do. Very different than the conversation in the Freedom Caucus. And she was with us last evening on the late edition of Balance of Power. Here's the prediction from Sarah Chamberlain.
He won't go 15 rounds. What I'm not sure about is maybe he'll have to go into the second or third.
Yeah.
There might be one member that's that says, okay, I'm not going to vote for him. So maybe we're pushed into the second round. Because remember, there is one. The gentleman from Kentucky is a hard no matter what. So you really just need one other one to say, you know what, we're going to make him sweat a little bit and send him into the second round. There's some that might be willing to do that. But we have to get this done, especially before January 20th.
And that's what Donald Trump has been saying as well.
Right.
So
But
is this
also
about
before
just
Monday.
getting it out of your system? You have a couple rounds, everybody, but then you come together and you make Mike Johnson.
Well, I think that's what Mike Johnson is really, really, really hoping for.
Sure.
And I can't imagine why any other Republicans, even if they have problems with Mike Johnson, would really want to slow this down. One, it would slog into the weekend, which, fine, it may do that. But Monday is January 6th, which has taken on a whole new meaning, but that is the day that they certify the election.
In a joint session, so
In
you
a
need a
joint
speaker.
session, right? So you need a speaker, and they cannot do anything if they don't get a speaker.
So
done
is that the
before
most
Monday.
powerful point of leverage here? I mean, that's what's really emerged as the argument this week. It's
it
just
could be.
different than it was in prior elections with McCarthy or Johnson.
Absolutely, and imagine how much Donald Trump wants the election to be certified on January 6th,
Yes.
given what happened 4 years ago on January 6th. He will very much want that to be his day, his special day, and have it be on that date. If it's the 7th or the 9th or the 10th, it's just not going to have the same, impact for him. And he is so conscious of spectacle that I think he's probably working the phones and his people are working the phones to make sure this happens today.
Well, you do wonder what kind of calls have been made, what kind of threats have been delivered, what kind of promises have been made. We see a 36-page rules package that they'll have to vote on. Does that stay intact, or is that a fluid document because the speaker doesn't want to touch it?
Right. Who knows with these guys, what happened. It all depends on what was said in that meeting last night, right? Whether they're going to tear it apart or give it up. So we'll see. I think Mike Johnson and Trump really had to work these guys over.
Are we spending too much time talking about this and not the great tradition that we're witnessing on the floor today? Anyone who's been in the chamber, if you get in the gallery for your 10-minute rotation, it's a really wonderful thing to witness here as we have a live view for our viewers on YouTube of the House floor right now. We'll get through this. There will be a speaker, but this is actually a pretty great American tradition.
It is a great day. And it used to be that the speaker would be, whatever party was in power would elect their speaker. The other party would vote for their guy. And it would just sort of happen without a whole lot of thought or phone calls or White House involvement or, or fingernails, bamboos under fingernails. But they also, people bring their kids and they bring their families and they bring, kids get to be on the floor. And it's like this whole really great, mom and dad is a member of Congress now. And it's it's just, it's a nice, fun American day, but it may not be today.
And we have the ceremonial swearings in and the photo ops and the family photo and all this kind of stuff. You wonder what's going through his mind right now, because obviously Mike Johnson is conscious of this, but the uncertainty and the pressure that surrounds him couldn't be greater.
He's probably much more confident than, he knows how to count votes. He's been in these meetings. He put out this note, which was clearly, you're going to put out this note before the vote, right? And he did put it out, so now it's in writing exactly what his agenda is. It's very Trump-friendly.
Does this note mean that he could get it on the first round?
He might.
Wouldn't that be a funny way to end this after all the talk this week?
That would be what Republicans really need. They need to show that they are a party who can govern, who are not just going to fight and say outlandish things and, just obey Donald Trump. They need to show that they can act. Because remember, Democrats' messages were the grown-ups in the room.
Sure.
And so Republicans have to prove that they're the grown-ups in the room. And electing a speaker on the first round, when everyone, including the president-elect, says, except for a few people, say it should be Mike Johnson, then it should be Mike Johnson.
One of the real arguments for Mike Johnson has been that no one else would want this job.
Right.
But it's the same three names that keep coming up. If there's a problem today, they look to Emmer, Scalise, Jordan, right?
Right, exactly. Jordan would be a real bomb thrower, right? He would be a very MAGA.
As we heard last time he was up for the job.
Right. And I think there are people, they're not enough. There aren't 218 Republicans who want 2 or 4 years.
Are there for either any of those three?
Steve Scalise is a popular, old school kind of guy. On the other hand, he's not well. He's, he's older. I think they really are pushing for this,
Johnson's the only one close to the votes. That's the fact today as we walk into this election, which is, we want to be, as transparent as possible with our listeners and viewers. We've got a lot of uncertainty here, but nobody actually is set to close the deal beyond Mike Johnson.
No, I don't think so. I think we will end the day with Mike Johnson as speaker or tomorrow.
Well, we're going to go through this together. Hopefully it will be today. By the grace of God. Wendy Benjaminson, thank you. We don't want to spend the night in the newsroom either. Good luck with your coverage today. Thank you for helping us set the table on an awfully important event with a live view of the House of Representatives on YouTube. Thanks for being with us on the Friday edition. This is Bloomberg.
1240 on Wall Street. We do check markets all day long here at Bloomberg. We're looking at an up Friday. We are on track for a losing week on the week. Holiday shortened trading week, no less, looking at a loss of 0.7%. But right now, we've got the Dow up 0.6%, higher by 260 points. The S&P 500 index up 58 now. That is a gain of 1%. And NASDAQ is up 258 points for the NASDAQ Composite Index, a gain now of 1.3%. Your 10-year, 4.57% with the 2-year, 4.24%. Gold is slumping $18 the ounce, down 0.7%. And West Texas Intermediate crude up 1.3%, $74.12 for a barrel of WTI. President Biden has blocked the $14.1 billion sale of United States Steel to Nippon Steel, killing a high-profile deal that sparked a political firestorm, along with tensions between the U.S. and Japan. Right now, we got U.S. Steel down 5.4%. ADRs of Nippon Steel, they are lower by 1.1%. Again, recapping your 10-year, 4.57%. The S&P up 59, a gain there of 1%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. Balance of Power continues, the Friday edition. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie Pellet, thank you. It's getting real, Charlie. We have a quorum. Thank you for joining us here on the fastest show in politics and a very important day in Washington with our eyes now live on the House of Representatives. Members of Congress assembling to choose their next speaker. The House has been called to order, took place at high noon. Mike Johnson being nominated as we speak as the speaker by Lisa McClain of Michigan. If you're with us on YouTube, the chair of the Republican conference speaking right now on the floor. This is going to tee up the procedure that will then lead to the vote for speaker here. And we don't know, if you're just joining us still, how long this is going to take, or if, in fact, if Mike Johnson has the votes. One thing I can tell you, no Matt Gaetz today. It was just made clear to applause in the House of Representatives that Matt Gaetz did not show up to be sworn in, as some feared, having left his seat in the House of Representatives to become a talk show host. He, of course, was chosen by Donald Trump at one point to be the next Attorney General, having withdrawn his name. The House of Representatives appears to be done with Matt Gaetz. So if you're playing along on your home game, remember 218 is what Mike Johnson needs. We have all lawmakers accounted for, 434 in the room right now. 218 is the magic number. And I'm delighted to say we have our signature panel with us. Let's bring them together. Rick Davis, Republican strategist, partner at Stone Court Capital, and Jeannie Shanzano, Democratic analyst, and of course, senior democracy fellow with the Center for the Study of the Presidency and Congress. Happy swearing-in day to both of you. I guess I should start here with just your basic expectations. And by the way, we're starting a little bit late here. This vote will likely bleed into the 1 o'clock hour, our second hour here on Balance of Power. Rick Davis, does Mike Johnson have the votes?
Yeah, I think he probably does. I kind of concur with what other guests have said, which is it may be an extra vote or two to get him over the threshold, cut some deals while they're on the floor of the House. But I would anticipate that the day would end with a Speaker Johnson. So I don't expect that there is anybody else that could garner the broad base of support that he already has, even if he has only the slimmest of margins.
What's your expectation, Jeannie? We're about to witness something here in the next hour. Will it be good for Mike Johnson, or are we talking about this tonight when we get into the second, third, or maybe beyond round of voting?
Well, I'm so happy. I'm excited. I feel like it's Christmas Day, Hanukkah. What a great day. And, you know, looking at, we see the quorum now, and so he does need the 218. And I think he likely gets it. I'm not sure if he could do that on the first round. And can I just say, Matt Gaetz, a newbie in the journalism world, got the best quote yesterday from Tom Massey ever. You could pull my fingernails out, shove bamboo up them, cut off my fingers, and I'm still not going to vote for Mike Johnson tomorrow. So credit to Matt Gaetz. I see why he pulled out of Congress and went over into the world of journalism.
That's fascinating. Pete Aguilar nominating Hakeem Jeffries now, of course, will be the Democratic leader no matter what happens here in the House. Tom Massey, the hard no. Rick Davis just went on X, went on Twitter and wrote, 433 members of Congress are being sworn in today. I am being sworn at. He's having quite a time there in the chamber. Is he going to be joined by Chip Roy, or is he on an island in opposing Mike Johnson?
You know, he might be on an island. It's not like he's actually lobbying other people to join him. What's interesting about this is it's kind of like he's just decided this is his star turn, and he's going to talk about all the pressure that he's been under and talk about what a maverick he is. And it really doesn't seem like an initiative to stop Johnson from becoming Speaker, just really an initiative to get attention. And the House of Representatives is chock full of performance elected officials. And I think after today, we're probably going to be counting Tom Massey as one of them.
Interesting. We've been watching the floor. Jeannie, members of the Freedom Caucus, Chip Roy, and others who we've been talking about here, Andy Ogles, they've all been kind of in the back of the room. What role do they play in the greater Republican conference? Are they outcasts? Because they appear to be driving the conversation.
Yeah, you know, it's great because we can see them taking phone calls and all the action on the floor in a way we don't normally see today, given we don't have a speaker yet. You know, it's fascinating because things have changed. It used to be that we would be concerned about a caucus, a group of people who might band together and try to move their party or the House in one direction. But now it doesn't have to be that. The numbers are so tight, you know, if the tightest in 100 years, that just one or two members can make a world of difference. And that's what we're seeing with the likes of Massey and Chip Roy and some of the others potentially. And, you know, they are outcasts, I'm sure, amongst many members of their party. But the reality is they hold power. And the problem for all of us is the change that's happened in the House. It is no longer an insider's game. You play with the majority, you play with leadership, and you will be rewarded. Now the rewards come from the outside, from going on TV, from going on social media, from making your name. This is the Marjorie Taylor Greens of the world, and they have done it, the Matt Gaetz. They have made names for themselves. So that's why I think this may potentially go longer than one vote, because they are incentivized. We don't know of these people unless they are outrageous, unless they stand up and say no. All the attention will go to them, and they can make a name for themselves. It's not a way to run a government, but in this context, it's a way to get your name out there and to get fundraising and votes.
Well, you're making a lot of sense, Jeannie, and I will point back to social media with regard to Mike Johnson himself, Rick. A pretty long missive here. It was posted at 12:17 p.m. Eastern Time. It has been viewed thousands of times, as you would expect. And it's essentially a letter to the Freedom Caucus, even though it is supposed to be to the entire Republican conference, with 3 points that he writes out here. As Speaker, I commit to, number one, create a working group comprised of independent experts to work with DOGE and our committees on implementing government and spending reforms to protect the American taxpayer. He got the endorsement from Elon Musk. Who is this tweet for?
You know, it's interesting. It's actually just a retread of an announcement he made when he had his first meeting with Ramaswamy and Musk, saying that he'd create a task force to work directly with their task force. So it's task force and task force. The reality is, I do think he's trying to assuage some of the more conservative elements within the caucus, especially those fiscal conservatives. These are the guys who were unhappy with him on the budget deal that he first proposed at the end of last year, that wound up getting thrown in the dust heap of history. And he had some repair work he had to do with them. You know, he looked like a big spending speaker, which was counter to their interests starting this new Congress, the 119th Congress. So I do think part of it is, hey, I can be responsible fiscally. Y'all be a good partner with the DOGE guys. And he also talked in that same missive about, launching audits in all these agencies, and most of them perform and are required to annual audit. But the biggest one, and the one that has been a huge disappointment, is the Department of Defense, where they've been under statutory requirement for half a decade to produce an annual audit, and they have not produced one yet. So I do think that he is speaking specifically to a growing chorus of fiscal conservatives inside the caucus who want to see a change from past behavior.
Spending time with Rick and Jeannie as we anticipate the vote for Speaker of the House with a live view of the House of Representatives. Both names have been entered into nomination from Republicans. Of course, it's Mike Johnson, Democrats, putting forth Hakeem Jeffries as their leader. We just got a prediction here from Tim Burchett, Jeannie, the Republican member of Congress who has been watched very closely here to see which way he's going to vote, says only 6 words in his post on X. This will go to multiple rounds. I guess that shouldn't be a surprise to anyone.
No, it's really not a surprise. The best case scenario for Mike Johnson at this point is he wraps it up under what Kevin McCarthy was able to do at 15 rounds 2 years ago. And the reality is that if you're looking at some of these still question mark folks, the Chip Roys of the world, Chip Roy, he is a firm believer that we need to be fiscally responsible. So what incentive does he have to go along with Mike Johnson on this first round? I mean, listen to what he said when he took to the floor the other day. He said he committed to his children to do everything possible to make sure that the party was fiscally responsible, and they are not, according to him. And so even with the phone calls we understand from Donald Trump and the rest, Donald Trump is somebody who campaigned on spending plans that would add trillions of dollars to the debt. So for somebody like Chip Roy, who's sort of like an old-fashioned, if you will, conservative in this regard, he has very little incentive. And the promise that they can try to run somebody against him in the primaries, he's not that scared of that either. He's likely to win and survive that, like Massey did. And so that's why I think what we're seeing from the Burchetts and other folks that this may go multiple rounds, it's for that reason. This is the House Freedom Caucus versus Donald Trump, Mike Johnson, and MAGA. And a lot of it is about spending, the budget, and the deficit. And Donald Trump's plans in that regard are not going to assuage Chip Roy.
Fascinating stuff here. We're being told, by the way, from our reporters in the House that we are just about to begin the vote. Now that we've got the quorum, the nominations are set. We've worked our way through this initial hour of procedure in this opening day of the 119th Congress. The vote soon to begin. And of course, we're going to have results for you live here on Bloomberg TV and radio in our second hour as we welcome our global television audience. Rick, is this as much a test for Donald Trump as it is for Mike Johnson?
Well, he kind of inserted himself into the politics of the House really toward the end of last year when he basically set up a no-win situation for Mike Johnson on the continuing resolution. And I think at that point he realized, okay, that's not working. I just look like a fool to try and micromanage the House of Representatives while I'm not even taking the oath of office yet. And so I think it was interesting that he sort of then just stuck to himself and didn't get out there early for Mike Johnson, let him kind of hang in the wind a bit until just recently when he offered his tweet endorsement. And so I think he's trying to feel his way through. He's not surrounded by a strong legislative team. If anything, he had more members of Congress and others who were spending time with him in the last election, last term of office than he does today. And so I think there is a little bit of a brain drain that has occurred on Congress, and he's become more reliant on Mike Johnson. And so it's kind of a mutual beneficial relationship now where he's going to have to depend upon Johnson to round up votes for his agenda because he really doesn't have a lot of capacity to do that himself. And so if he loses this vote, or even if this vote goes 2 or 3 ballots, he's going to look a little neutered, the president-elect, when it comes to the House.
Well, we're going to find out together here with our eyes on the floor of the House of Representatives, our signature panel in place. Live coverage straight ahead of the election of the next Speaker of the House. Do stay with us on the fastest show in politics with Rick and Jeannie. I'm Joe Matthew in Washington. This is Bloomberg.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
The new Congress is called to order. Welcome to the fastest show in politics at the start of the 119th Congress, but we do not have a speaker yet. I'm Joe Matthew alongside Kaylee Lines in Washington. Kaylee, the nominations have been set. No surprise. Yep. Mike Johnson, Hakeem Jeffries, And the roll call vote for the next Speaker of the House is now officially underway.
There are 434 members who are present and voting as we speak. That makes 218 the magic number to secure the gavel and be the next Speaker of the House for Mike Johnson, of course, the incumbent Speaker. That means he can only afford to lose 2 Republican votes. We already know one who is a firm no, Tom Massey of Kentucky. What we are waiting to see is if anyone else joins Massey in voting against Johnson as Speaker.
That's right. Congressman Tim Burchett, who was with us earlier this week, the Republican from Kentucky, saying on X, Kayleigh, this will go to multiple rounds, which even Mike Johnson is allowing for in some of the interviews and conversations we've heard from him. Sarah Chamberlain from the Main Street Republican Partnership last evening predicting 3 rounds, but it would end with a Speaker Johnson in this new Congress. Kayleigh, if you're with us on Bloomberg TV or on YouTube, the clerk getting this roll call vote underway.
Indeed, this will take some time as they have to read out each member's name one by one, and they must verbally say who they are supporting for Speaker. Already one member of the Republican conference has elected not to name anyone this time around. Andy Biggs of Arizona sat out on the first round, though they can come back around to him later as they try to get a full tally, keeping in mind that, again, 2 votes is what Mike Johnson can afford to lose as he tries to get to 218. Rather, he can't afford to lose 2.
Yeah, he can lose 1.
He can
this
lose
is
1.
it right here. Knowing, by the way, Tim Burchett, aforementioned, voted for Mike Johnson. Chip Roy is a name that we're going to be watching. Of course, to your point, alphabetical here. You know when they're coming, if they do plan to vote at least. And once we hear from Chip Roy, we might actually know where we stand. There are other members of the Freedom Caucus who have been giving Mike Johnson some agita. And he was posting earlier on X, Kayleigh, with what he would do if, in fact, he was the next Speaker, which he expects to be. The first item on the list of 3 was working with Doge.
Yeah, he says that essentially what the House Republicans want to accomplish is reducing the scope and scale of government, keeping in mind that many of those who had been reluctant before this point to express support for Johnson did have concerns specifically about fiscal matters. And that does seem to be what he was trying to assuage with this kind of manifesto he put out in the minutes before this business got underway, the suggestion that he'll be auditing federal agencies, undertaking aggressive authorizations and appropriations reviews. He is trying to make those fiscally minded members come onto his side.
It looked like maybe a salvo in an attempt to get this done in the first round, but I'm not sure, Kayleigh, that anyone actually expects that to happen. I'm glad to say that we have our signature panel with us on this important day in Washington, remembering it is not just the election of a new Speaker. This is the start of a new Congress. And it's typically a day of great optimism and positivity here in the nation's capital as lawmakers bring their family members in for their swearings in, for their family photos, something that Rick Davis knows a lot about following his time on Capitol Hill. Of course, our Republican strategist partner at Stone Court Capital, joined by Jeannie Shanzano, our Democratic analyst, political science professor at Iona University. Rick Davis, as our Republican, what are you hearing and how many rounds do you expect?
Well, I'm watching very intently right now because Michael Cloud from Texas indicated some concerns about supporting Johnson, and I think his vote has, I'm just seeing he's up in about 2 more members. So another tumbler is going to fall as we, get along the way here. And of course, we've seen Andy Biggs decide to take a walk. He'll vote later. We don't know what he's going to do. Might be some kind of game he's playing to show some opposition to Johnson. And the other, Andy Harris, has indicated, also a Freedom Caucus member, that he may withhold his support. So the game is on, and we're starting to see it emerge in this very first ballot, some people who are willing to not toe the line initially anyway.
Well, we now have had 3 members in total at this point in the roll call who have decided not to vote. That does include Congressman Cloud, who Rick was just referring to, as well as Congressman Andrew Clyde has not answered. And again, we already mentioned Andy Biggs of Arizona, keeping in mind that this isn't theoretically just an open vote for Mike Johnson or against him, Jeannie, but also kind of against the will of the president-elect and the leader of the Republican Party. Donald Trump has expressed his desire to see Mike Johnson stay on as Speaker of the House. We understand he's been making phone calls on Johnson's behalf. What will it say if there are a number of Republicans who go against Donald Trump's will here?
Yeah, it'll say that the Republican Party won Washington, D.C. They hold the House, the Senate, and the White House in a few weeks. And yet it's going to suggest to many Americans that they are not prepared to govern. And that is the worst case scenario for the incoming president. because he made a host of promises on the campaign trail. We've seen how quickly he has been trying to move forward with his nominations and his plan for the first 100 days as he comes in as a lame duck. And this will suggest that the House Freedom Caucus is not going to make it easy, and that there are going to be individuals from the Republican Party who could hold up plans. And so it is a blow to the president if this doesn't go Mike Johnson's way on the first round. I do think ultimately Mike Johnson gets there, but it does speak volumes about what we've got in store with the 119th Congress.
Remembering 218 is the magic number with our quorum here on the floor, and some of the names that we've mentioned that did not choose to vote or answer when called upon will still have an opportunity to come around. Rick, are there live conversations happening to the extent that we saw surround Kevin McCarthy, for instance, with lawmakers being convinced in the midst of a vote to make their decision?
Sure. I think you see folks gathered, especially in the back of the chamber right now, talking to one another, that they're probably trying to iron out a deal to get some of these recalcitrant members to follow up their vote with a positive vote for Johnson. Eli Crane just voted a second ago. He was one of the group of 8 that opposed Kevin McCarthy and got him to vacate the speakership. So he's voted for Johnson and seems to be falling in line. So it's not a clear sweep with different kinds of caucuses joining in. It's almost like individuals have grudges to play out with Mike Johnson, and they're doing that by at least initially withholding their vote. We'll see whether or not that turns into a no vote.
Well, yeah, that's what we're all waiting to see, is they will come back around to these members, as Joe has mentioned. And I guess it raises a question of whether or not this is something akin to what we saw when Kevin McCarthy was attempting to become Speaker of the 118th Congress. And there were members who held back their votes initially as well, as we know that ultimately went 15 rounds. Jeannie, could this, though, be the statement not immediately expressing support for Johnson, at least making him sweat through this first full roll call before they come around and eventually vote? Or do you think they actually, if they haven't voted yes yet, could force him to not make it on round 1, force this to go to round 2, as Tim Burchett suggested it will?
I think they could force it to go to round 2. I do not see this going the 15 that McCarthy's did, but I do think they could force a round 2 and potentially even a round 3. There are some real differences between what happened with Kevin McCarthy 2 years ago. I mean, number one, there was a lot of animus against Kevin McCarthy personally that we don't see here, as Donald Trump has said. Everybody likes Mike Johnson. He's a nice guy. So that's a big difference. Another big difference is that, of course, while Donald Trump supported Kevin McCarthy when he was president, the reality is that he is putting much more concerted effort against supporting Mike Johnson. But it's going to come down to something that Rick just mentioned. What can you do for me? These holdouts are asking for things, and there are things that they want to be assured of by Mike Johnson. And he was very clear today. He's not making any deals. But if he wants the speakership, he is making deals. And I think after this is over, we're going to find out what some of those are. And we know, speaking of Kevin McCarthy, he made some deals, and that ultimately was his downfall.
Interesting. Jeannie, there's another nominee there. It's Hakeem Jeffries, of course, who will end up being the Democratic leader in the House. He has said openly to reporters that not a single Democrat will vote for Mike Johnson. Will they be unanimous behind Hakeem Jeffries no matter how many rounds we see?
Yeah, they will be unanimous behind Hakeem Jeffries. Even some of the more conservative, middle-of-the-road Democrats, they will vote in lockstep. Mike Johnson really did himself a disservice. The reason that he was successful in his first 14 months was because he was able to work with Hakeem Jeffries across the aisle, and it was Democrats who pulled him over the line for so many important votes. That did not happen with that last CR, and that is something that Democrats take seriously, and they are not prepared to bail him out this time. It will be lockstep 215 for Hakeem Jeffries.
Again, if you're with us on Bloomberg Television, you can see the House floor as this roll call vote for House Speaker is ongoing. You may have just heard a call for order in the House, a little bit of disruptance with this business still underway. And we can add a 4th Republican member conference member to the list of those who have decided not to vote on this first round. Paul Gosar of Arizona, Rick, did not vote this go around either. Again, they will come back to all 4 of these members. The list now including Gosar, Cloud, Clyde, and Biggs. I guess, Rick, I wonder, as these are a number of members, Gosar specifically, who had previously suggested that after Trump's endorsement, Johnson would ultimately get their vote, is if this